Why don't we get started here? So just so everybody understands, we don't have to get through all of these spills, all these, and we don't have to have the final answer today. We will have another subcommittee next Tuesday morning, but we have to have the certain five bills have to be out of committee by next week, early next week. So, and those bills are ones I want to do first. So what did I do with my cheat sheet?
The ones we don't need to vote on, I just leave these blank.
Yeah, yeah, if we don't discuss, when we get around to discussing them. So,
My hands are still tired from yesterday.
all right.
No, he wants to do the one we voted on. The one he has to vote on.
Okay.
I think he's fighting him right now.
Okay, the first one on my list is digital kiosks, and Keith's not here, so we won't start on that one. Next is requiring the opportunity for public comment prior to proposed long-term care rate increases under certain circumstances. So this is 610. Okay. Okay. So I did have a conversation with the insurance department. There you are, Michelle. And did you guys have do anything or but what my concept was that right now the insurance department reports annually on a summary of what is happening in the insurance market relative to health insurance. So we're saying, well, while they've got everybody in the room that day, why not have them do also a summary of what is happening with the long-term care insurance? The bill, as it's introduced, it looks to try to have a hearing on each individual policy and have a play. That's totally inappropriate. That in terms of dissecting an individual policy, but that because that obviously they don't. Different insurance company doesn't want their competitors to know what they're doing, so if I'm thinking correctly, is that if we can, the department summarize them. The only other twist I heard is that sometimes companies come in for multiple year proposals. Are you aware of that?
Yes, usually when they submit their rate filings, it may be that the rate increases over a longer period of time. Sometimes we require that because, it would be a huge shock for rates to jump up. However,
So
for
doing
actuarial
that for
reasons, they
solvency
do need
issue
to.
of it,
So
right,
we could
okay.
have increases that go over like a 10-year period,
Right.
something like that.
That far out? Wow,
Yeah, these are long-term products that are in place. Usually
They
people
have
buy them when
long-term
they're
problems
younger.
too,
Yes. Which, so the amendment that, we have one drafted up that we can send to you. We just
Okay.
kind of put it together, this morning, so we can send it over. One option is we do have a lot of information on our website. We have a whole page dedicated to long-term care coverage. We have a dashboard up there that has all of the increases that have been approved. Every quarter, we're updating that so people are aware of whether things have been approved or not. There's information about the carriers that are writing these types of products and a bunch of consumer guides about how the product works and stuff like that. So we could put in an amendment that would require us to maintain that page on the website and to make sure it provides, certain things like information about the products, rate increases, and information to assist consumers. It sounds like, though, you want us to do some kind of annual thing. I know in our statute, there are a lot of annual reports that
Yeah.
get filed.
Exactly.
I think some of those annual reports are not very helpful in many ways because it's a snapshot in time, and without clear parameters, I think they tend to go the way of something vague. I think what is really going to help consumers more is just making sure that information's available. So we could do, like we have with our major medical market, we have an annual hearing on health cost drivers that is fairly dense, and we throw a lot of information at people. We could do something like that, or we could just maintain the website. We
Yeah,
do
well,
get questions
I was hoping
in
you
all
do
the
both.
time.
And the reason I'm saying is I think that it's the trend is important, that people need to hear what's trending.
Yeah.
And so they're not going to necessarily see that online unless you do a report. So yes, I'd like to
You
have
want the
I want
do you
an
want a report or like an annual?
annual
hearing?
summary, annual to say what is trending
Okay.
in that past year.
Okay.
Okay, it's just much like we do with health insurance.
And that would be a report that gets, filed with lawmakers essentially.
And you certainly can submit that too. And then obviously then put it up.
And on our website, yeah.
Put it on the website.
Yep.
So how do people feel about that idea? Representative Streisand.
Yeah, I feel that the bill was drafted because the major concern was in certain years, the premium increased too much, like 20%, 15%. So it's not a matter of, public hearing or reporting. It's the matter that we need to have some regulation to regulate what's the max cap a percent can go up, something like that. Because I think the people who testified that day, they were burned out because they didn't know that unexpected rise of 20%, 15% increase. That's why burning them down. So I think we have to nail the real problem here, not just creating some report or public hearing where you show the trend. What will they do with the trend, even if you are saying that it will still increase 20% in 1 year? They can't afford it. That was the main problem that was presented in the testimonies, and probably that's why the bill was drafted. We can work on technicality of the bill, drafting, etc., but we shouldn't forget the purpose of the bill, which is to reduce the cap, that the max they can increase is by this much, not beyond that, something like that.
Yeah, and there's case law on that prevented us from putting some kind of cap in. So that's why we've kind of ended up where we are. These products are problematic. It's a market that is not doing very well. There were some bad assumptions made many years ago with the rise in healthcare costs. They didn't anticipate it going up so high. So there are a lot of carriers writing this product who are going under. And so without significant rate increases, this is not a viable product. And if those companies go under because they're not collecting premium to cover the cost of the product, then that's when the guarantee fund comes in and you're going to get a fixed amount and that's it. So it's not something that we can just cap because there's not going to be enough money being collected to actually cover the cost of this product.
Follow up. I hear your concern from business perspective, but think about from the consumer perspective, what was their fault when they bought this product? They were actually given certain assurance that this is what is going to serve them when they get older. So in that case, you can't just because you have to keep the business viable, you can't just penalize the consumer as because they were given certain hopes or certain, that they'll be getting this, and now they're not able to meet that standard. So there has to be some compromise. I understand that you have to keep the business viable also, and that's why the premiums are going dramatically up. But at the same time, it was also the fault of the company who offered those products, who couldn't anticipate that 20 years down the line, they can't support this product. So
Yeah.
you can't just penalize the consumer for the fault from the business alone. You have to have some compromise. So something needs to be done. That's what I'm saying.
Yeah.
I don't know the solution, but I'm totally against that. Just because you want to keep the business viable, you just keep increasing the premium to keep the product.
Yeah,
That's
and
not the solution.
And I completely understand that, and it's not a problem just to New Hampshire, it's a nationwide problem. And at the nationwide level through the NEIC, there are a lot of work streams dedicated to trying to fix this. There is no easy solution. We understand consumers are being left in lurch, and that's not what we want to happen, but there's no easy solution. So we're trying to figure out how to make this viable. And, you know, if we don't come up with a solution, or if we only take the consumer's perspective, then those companies go under, and now the consumer's left with really nothing. They've been paying in.
I did say that.
So it's like there are
balance.
no good options here, and we're trying to navigate some solutions that are feasible, that will actually do something, but it is a difficult situation. And so I think one of the things this bill is trying to do is to make consumers more aware of the issues with this product, and that's where some of those disclosure requirements came in, and just making people more aware of what this product is, what considerations you need to take into account, that rates could go up. And so that's what we're trying to do, is really just educate people so that people looking to buy this product now are not stuck in that same position.
I'll do
And
another
we're-
quick follow-up.
Yeah.
So I understand that going forward, you're trying to take care by educating the audience that this is the problem with this product and be completely informed. But the bill, I think, is trying to address people who are already suffering because they bought 20 years down before. So educating is for future. What are you going to do for people who already bought this faulty product for no fault of theirs? Because that was the promises given by the company at that time. So that is something we need to address in the bill. Second thing you didn't mention, it's a nationwide
Mr.
problem.
Chair, point of order.
I was going to give him three chances.
Yeah,
Okay. But this next time, when you were done,
yeah,
she's not going to speak. I'm going to tell you.
yeah. That's fine.
I'm going to tell you the answer.
Yeah.
It's a really big answer because you don't get
It's
it.
10 seconds. So second thing is that
Mr. Chair,
you mentioned
cut the mic.
nationwide problem, but let's just focus on New Hampshire because I guess this bill is trying to address the problem in New Hampshire.
Okay.
Thank you.
You're all set, right?
Thank you. Yes.
You've asked it 3 times.
Yes.
And 3
I
times
already made my point.
you're about to get the third answer.
Yeah.
And you have to understand this is very, very important because this
That's
is
why-
what I am fighting when it comes to the risk pools issue. I am fighting when it comes to almost every insurance issue we have. Is you have to understand the insurance department's responsibility, fundamental, basic, is solvency. The solvency of, just please listen to me. And I know that you think that's terrible and that the insurance companies have plenty of money and have plenty of things, but at the end of the day,
First of all, Mr. Chairman, hold on a second.
okay,
First of all, my answer was not against the insurance department.
yes, it is.
This solution is not going to be helpful to the problem that is being mentioned in this.
Got it. It will not be helpful. This solution is no good. So you're saying is you are opposed to this solution because it doesn't do anything to help people who have this policy. If you would ask me what these people should do, they should sue their insurance company. The insurer, they would say, document that they were lied to, and then they can sue. But I'm pretty sure that those documents made it clear that the rates could go out of control.
Yeah, I heard that,
Can
Mr.
we
Chair.
move
First
on,
of all,
Mr. Chair?
anything
So-
I said is about the problems.
Could we please move
I
on?
understand
It's
that.
not directed against the insurance department. So I don't know why you're saying that I'm trying to, address the insurance department, stand on it, or this.
You're asking the insurance department to set, or you're asking us, the legislature, to tell the insurance department
No.
to cap
I,
the
I-
premium. Did you not say that? Did I
said
misunderstood that?
Yes, I said that, but it was not addressed to the insurance department. I'm saying that we have to do something to cap it so that people don't get 20% raise and then they'll get burned out. That's all.
Okay. You said that.
That is, yeah,
okay.
that's what I said.
That is your position.
Yes.
And I'm pretty sure, is anybody in this room, on this committee, does not understand, he thinks that we should legislate capping
yes.
the increases.
That's what I think.
Everybody heard you, okay?
Yes, that's what I meant.
Okay. Everybody heard you.
Yeah. And that's
Okay.
what I
So
want
now-
to mention. Yeah.
Okay.
That's exactly what I
So
want.
this is going to be another one of those where you're the only one.
I don't know that about that.
Okay.
Chairman, this is
All
subcommittee
right,
right
let me
now.
follow up.
Ton of bills to do. Can we move
Is there
on?
anybody else agree with Representative Sharifa? Agree.
No, I don't agree. What you're saying is you're gonna push these insurance companies out of the market.
I didn't say that.
Well, no,
You-
but that's
that's
what
the
that's what
consequence.
it does.
Okay, remember John Hunt's rule of licensure? Why we have licenses? The reason we have licenses is that we take it away from you. Okay, that's the reason we create license, so we can take it away. So if we were to put caps, and the company says we can't abide by the caps, we're gonna go bankrupt. We're gonna go finance. They will withdraw their license. They will withdraw
So-
from the state.
Can I speak, Chairman?
We
No,
have
I-
12
no.
bills.
I
Okay,
would like
first of
to-
all, this is a subcommittee, right?
I would like to hear
Okay.
what
Is
you
this
were
subcommittee,
saying
yes or
about
no?
solvency,
This is not a
please.
public hearing, right? This is subcommittee.
Okay,
And we
but
have
I
both
think
here-
I would
experts.
like
here's the
someone
important thing
else
about a
to ask the
subcommittee.
question.
This is the important thing about a subcommittee.
I want others to chime in. I'm not stopping anybody.
And everyone else in the room right now is chiming in to tell you to stop talking.
No.
Yes,
Didn't say
that's what they want.
Yes.
Okay. Do you want to have a vote? You want to see everybody raise their hand and say they're all done hearing from you?
I already expressed what I wanted to say. But
Then you're all
Why you
set.
keep talking?
Then you can turn your mic off and sit quietly.
no, but
Okay.
I would like
All right.
to hear what you were saying
Okay.
about
So
solvency,
simply,
please.
the issue here is that when I don't know if you noticed when I said, "Oh my God, 10 years," that they're talking about increases 10 years. That 10 years, that number is coming from the insurance department to say, if you're going to make sure this product is solvent going forward, you got to give us a proposal that ensures that you're going to recover, you're going to get that solvency. And so they're saying is not 4 years, which I was hearing, but now they're talking about 10 years. That's how bad these products are. That's how underwater they are. And they're going to need these whopping increases for years and years to come, which frankly, I'm glad they're telling us now. They're telling the consumer now that, by the way, this is not such a good deal anymore, that this is going to be very painful for the rest of your life. Do not turn that light on. Do not turn that light on. Please do not speak.
why addressing to me if you don't want to hear back from
I've
Rizal?
asked, I told you, you had your opportunity. As a matter of fact, you did it 3 times. I gave you 3 times to ask the same question. And all I'm going to say is, you're all done. Okay? Now, I'm going to ask the rest of the committee. Anita. Okay, I'm going to ask the rest of the committee. Does anybody have a problem with this?
Being rude. No. If you don't enough, I'm getting security. It's enough, Minaj.
Okay. Okay, so the next thing I want to do is then ask Hal, would you mind coming forward? Or Adam, or whoever you want to. Okay. So you hear that somebody really loves what you put in this bill. You can hear that, but okay. Yeah.
We did not propose caps.
Okay.
That's been tried, went to court, hard caps were knocked down. But the idea that all these companies are underwater is not correct.
That's good to know.
And the reason why there are significant increases is also because the carriers made a decision to stop selling the product. Once you stop the flow of new premium, you're dependent totally on the in-force policies.
Right.
All types of insurance depend on the flow of new premium, health insurance, anything.
So the proposal that we have here, how do you feel about this proposal?
Well, the idea of annual reviews, I think the carriers would object to that. That's a lot of extra work.
Right.
These carriers come in once every 3 years, once every 5 years for increases. Okay, to make them have to justify all their increases going forward every year is a lot of extra work for the
Okay.
carriers, I think they'd probably object to that.
No, and that's a good point to point that out. I guess what I was thinking was that the department would be reviewing what applications they had gotten in the past year and what was trending. So if a application is only coming in every 3 or 4 years, then it's only when that application is coming in that the department can report. And again, it's merging it with all the other companies that might be filing that same year period, that they could be combining them together, and not giving any particular information about one or the other, but giving a summary of a trend of what is happening in the industry.
I think the trends are pretty well known. The department publishes all the time every increase that's approved. So all the carriers see what the other carriers are doing. There's no secret to that.
Right, but I think this is more for the consumers to know what was happening.
Yes, but a lot of times they're not concerned about it until they get the letter in the mail saying your premium's going up. Then they begin to start doing some research, or they call the advisor, or they call the
Right.
insurance department. What we're asking is to give the consumer a period where they can weigh in on what the effect of those increases are, and for the department to dig a little deeper as to what's causing the increase. Big part of it that the department has never asked is what's the impact of stopping selling the policy? So all these carriers have moved on to different varieties of long-term care. There's all kinds of new innovations, but it doesn't help the in-force policies that were originally sold in the 90s and early 2000s.
Right.
So,
You're saying is the problem is that once the new premium has been approved by the department, or you want to do this before they approve it?
correct.
So but that's for each individual policy?
Well, there's only so many long-term care carriers. And when they file for all their series. Okay, and they'll break it down by the year in which the contract was purchased, but they're coming in for all the increases together. So MetLife files, John Hancock files. It's not individual policies, it's everything that they have on the books within these series.
And then people are you're going to say to all those people with those policies that you're going to tell them when this department is going to hear it, or when you're submitting it to the
It's on the
department.
carrier to tell
So
the
you could be-
consumer
you-
that they have filed for an increase and it's in review
Right.
at the insurance department. They have, we hope, 60 days to which to make comments and impact.
Well, I have a better idea. You send out, when you're doing that, when you're about to send it to the insurance department, you send out a letter to everybody in all your consumers. You send out a letter, and probably you should send out what you're going to be asking for the increases, and say to them, please, and give the address for the insurance department. Please send a letter and let these people know, let the insurance department know what the consequence of this increase is to you.
Right.
How about you send a letter? You send out a letter. No,
Who-
this
who
is not
is
the
you?
part. You, the company, no, excuse me.
The carrier?
The carrier,
Yeah.
okay, the carrier, or in your case, you're the agents. Somebody should notify all the customers that the rate increase is being submitted to the insurance department, and here's what it is, and if you have a problem with it, you should be sending a letter to the insurance department.
Exactly.
Okay,
We
so we
want
don't need
advance
legislation.
notice before the insurance department approves the increase.
Exactly.
Let the consumer weigh
Let them
in,
know when the insurance department's going to approve it.
be it a hearing.
Get that letter in there before.
We've been willing
We
to.
don't need a hearing. You can send a letter.
Correct. We said that to the department. You could have a comment period of 60 days.
Okay.
But it's an advance to the rate being approved.
Fine.
We're amenable to that.
All right. Why don't you step aside here for a moment? Or actually, you can stay right there. Michelle, I see an empty mic that hasn't been unplugged. Okay,
Hello.
so how do you feel about that is the solution? Is that simply there's a notification of the consumers ahead of time?
It would be difficult. I mean, I guess the carrier would have to then identify who would possibly be impacted by this and send out a letter to them.
Okay, yes, I think the
and
carrier
then-
needs to send the letter.
I mean, part of it too is that these rate filings are confidential until approved. And so there is back and forth. They may request X, and then what actually gets approved is Y. And so with our actuaries are looking at this stuff, and there's a
Right.
back and forth before anything gets approved. So I think it could happen. I mean, I guess if we have the
Or if
carrier
you-
try to
if you-
identify.
Let's say after you approve them, there's a delay before they're actually implemented.
Mhm.
So would you want it after they've been approved? No, you want it before they're approved.
Should be before they're.
Okay, but how are we supposed to do with this confidentiality statute?
The companies know all the policyholders are going to be impacted by the requested
No,
rate
she's saying
increase.
confidentiality from competition knowing it.
It's
Right?
it's already out there on the website.
Once it's approved, but
Once it's
when
been
it
approved.
gets filed for approval.
You want
it's
it
not
before
public
the
yet.
final approval.
Correct.
You want notification, so how do we, you have to, the company has to be waiving that RSA that requires?
Well, I mean, you could always change the laws, but then I guess what is the point? Because the rates are being looked at from an actuarial perspective.
Correct.
So we could collect public comment, but I guess the question is, what do you want us to do with that public comment?
The actuaries looked at certain information. They looked at loss ratios only, but they didn't take into effect any of the issue of stopping selling the new policies. I had the discussion with the department. The assistant commissioner said they never looked at the impact of that. They never asked the carrier to tell us what the impact of stopping selling the new policies was.
So you want, let me get this right, you want the insurance department to calculate the death spiral? Because the premiums will keep
No,
going
the
up,
carrier
and
has
therefore people will,
The carrier has all that information. We're asking the department to maybe look a little deeper as to what's causing these increases.
Yeah, but we just decided that the department really can't say no based on the increase. The department is supposed to only say yes, feeling that it is covering your reserves. And so that you are solvent,
No,
right? You want to change their charge.
prior commissioners have gone back to the carriers and say, we want you to adjust this, and it has been done,
Really?
okay? Commissioner Savini went back to the carriers, got a 7-year moratorium on the increases. So when the department does push back and not just say, yes, okay, we can do that,
But if he was to make that argument, he had to feel confident that that solvency was still there
Correct.
with that.
and there was no issue with the
But he was
solvency.
confident to solve it. In other words, the actuarials was telling him, yes, they're solvent enough. They could reduce their increases for 7 years.
That's what he agreed. They agreed to.
Holy
They
moly,
took the
that's as bad
increase.
as the risk pool was.
They took the increase and then they agreed no increases for a 7-year period. So it's not really an issue of solvency. It's an issue that they want many of these contracts off the books.
the
they're not-
companies. The companies,
The companies want them off the books
right. So they're raising the rates to get people just to go away. They want the death
in
spiral.
large part, yes,
They want the death spiral.
right.
Just to clarify, the rules that were in effect previously that the court struck down about our ability to cap certain rate increases
Right.
were in play when Commissioner Savini was the commissioner. So I think it was a little bit of a regulatory, there was a different regulatory framework in place
Okay.
at the time.
So you're
That
pointing
court
out
case
that
was
the
more
law,
recently.
the court, because of the court case, that Savini would not be able to get away with that today.
Yeah, and I
Yes.
think
No,
also,
that's not true.
just to clarify, we do, under our actuaries, don't just rubber stamp rate increases. There is a significant amount of work that goes into verifying and making sure that any rate increases are justified. And I would have to check with her, but there's definitely back and forth, and what is submitted is not necessarily what gets approved. There are a lot of adjustments that go, that happen in that rate review process.
The court case involved one carrier. It involved the solvency of that carrier, and the court case was based on the fact that Commissioner Savini allowed no rate increases after age 70. Court said you can't have an arbitrary limit. It has to be based on the solvency of the carrier
Solvency,
and the
that's it.
ability to pay future claims. That was
That's it.
one company that filed, okay? Then the department took it and understood that we can't deny rate increases, which is not true. But the agreement of the 7 years was after the court case.
But again, it's at the end of the day, it's solvency. So what are you proposing for us to change the statute? Is to say that the department is going to use which piece of facts, what thing state is that they can't do the 70 because the court said you can't do it. Do you want us to pass to put that back in the statute?
The court said what?
That you couldn't do it, that the department could not order or put in the 70-year cap.
They did.
70 years old.
It came in after the court case.
I'm saying is, normally what happens when people get a bad decision in a court case, they'll come to the legislature and ask us to change the law. So what you want us to do is implement the 70?
No. It doesn't require a change in the law.
Yes.
When the commissioner pushed back on the carrier agreed to modify the rate increases. That's all it was.
Right. So so again, I don't know what you're hoping to what people sending these letters to the insurance department, what are you expecting the commissioner to say? Oh, geez, because all these people, evidently, you just put it out. If they all say that they can't afford it, that's going to fall on deaf ears because evidently that's what you're thinking the companies want them to say, and then cancel the policy. So I guess I don't understand what you're hoping to get with people sending letters to the insurance commissioner unless we give him some statutory authority to make a decision other than solvency.
He has the authority.
All he has is solvency.
The court case, if you read the last paragraph, said very clearly, the department has two responsibilities: to assure the solvency of the carrier, but also to take into consideration the effect on the consumer. There's two parts to that hearing, to that court case.
Okay.
Okay, so we keep going back to the solvency issue, but we don't address the issue of the impact on the consumer. And it did say in that paragraph that the commissioner does have the authority to decline the rate increases if they don't think they're justified. So I guess what we're asking is that there be a period where the department does go deeper into what the impact of these increases
Well,
are
they're not-
and what's causing the increase.
They're saying the actuary to come up with some calculation of how many people might cancel the policy.
Ask hard questions.
Well, that's not a hard question. We're statutorily saying
Right.
what you want the department to do before they do, make their decision.
Right.
So I don't, all we're going to do is say, I'll look at that and think about it. But at the end of the day, we don't have, I don't know, I guess, what is the actuary baseline for them to have this calculation that you were asking for? I mean, I guess I could say is there one even exist?
So part of the actuarial analysis is we would never approve rates that were discriminatory or were in excess, like
Right.
severe excess. Obviously, there has to be some kind of profit margin in there, but we don't ever want to see rate increases. We're, trying to help out the consumers. That's ultimately what everything we do is, because it impacts consumers. So we wouldn't approve a rate that was just to, line the pockets of an insurance company. But you need to balance that with what is necessary to ensure that the insurer stays solvent. And so that is part of what the actuarial analysis is. And it's looking at a number of different factors, and it is a robust analysis.
Which is what I started the premise, the whole thing. This is not about, is it a death spiral, a death spiral in here that people are economically cannot afford it and will have to drop the policy. That it's the problem is that if they did calculate that, then the solvency is even greater. It's even more urgent.
Thank you, Mr. Chairman. When the actuaries look at the possible rate increase for long-term care insurers, do they look at the other lines of business? As well as, in other words, maybe they're losing money on the long-term care, but they're making money on their life insurance or annuity business?
No, that would be the financial solvency, is looking at the overall solvency of the carrier. But when we're doing the actuarial analysis for rates, you're looking at the specific risk pool for that line.
Okay,
So
thank
you
you.
wouldn't be
To the-
able
to
to
the-
look
yeah.
at, life insurance if you're
Policy.
talking about long-term care.
I mean, give me something how that we can work with.
I think we've given you what we're asking for. Is it a period to notify the consumer to allow them to weigh in and for the department to also ask hard questions?
Hard questions is a little hard to define that in a statute. We're not good, that's a nebulous, hard question, it's a nebulous term. What is it specifically you want us, the department, to do? Because by the way, this is, if you're asking them to do something they don't do already, then the companies are gonna have to pay for it.
The assistant commissioner said they do not ask the impact of the carriers stopping selling those contracts. Never asked that question. Isn't that a hard question?
You're all set? So DJ, what do you got to say?
So I was just going to add to Michelle's last answer, and then I didn't quite catch
Okay.
the specific question that he had.
Okay.
So I have heard the argument in the past about spreading the losses over entire books of business. You can't do that. It's illegal to do that. Because the principle is, if you're a company, say MetLife, and you're offering homeowners coverage and personal auto and whatever else, and you're a policy holder in one of those lines, is it fair to you that your premiums are going to go up because a separate book of business went sideways when you never had that policy? And so behind that principle are statutory prohibitions against that. It's not a policy call that I've made. It's a call that was made long ago and put in statute, in addition to all of the financial insolvency principles that Michelle referenced before. So that's the issue there. So we just
Are
can't
you
do it
okay
by
with
law.
that? You hear that?
I understand that.
Okay, so
That's not
now
what
the
occurred.
question he's asking, you want to re-ask the question to the commissioner.
Yeah, sorry, Hal. What was the specific question?
What is the specific question you want him to, what is the hard question he wants to answer?
When they have losses. So in California and Florida, when they had losses in homeowners, did they have the reserves to carry those? They didn't pass that on to others. That's where they went to the reserves to carry the book of business.
Well, they certainly
To
use
pay the
the,
claims.
yeah, they
To
certainly.
pay out those claims that were current policies, and then they canceled the policy. Then they canceled the policy. In other words, they had they used the corporate reserves to take care of them, and then they canceled the policy altogether.
In some
So
instances,
yes, that is still true here today. Okay? In other words, if all of a sudden that there are no renewals, the companies could simply cancel the policy and then pay out the tail, as we call it.
Right.
Okay.
But they went to their.
So that's not your
reserves to
question you were
pay the
asking me
claim.
before. That's not the question you were asking me before. The question you were asking me for was the hard question. What was the hard?
question is, what's the impact of a company stopping selling policies? Now, I asked that to your assistant commissioner. He said, we've never asked that question. We only looked at the claims data.
So which assistant commissioner are you talking about?
Your current assistant commissioner.
Jason Dexter?
No, the other one.
Keith Nyan?
Keith, yes.
All right, well, I'll talk to
We
Keith.
were
He's
in
in
the
a-
department, we
What's
were in a
that?
meeting with you and him.
Well, I don't
Asked
recall
a
that specific.
question.
I don't recall that specifically coming up.
Well, I asked that specific question. He said, no, we've never.
What is
asked
the
it."
impact? Well, a company has a right in responsibility, frankly, to appropriately manage their risk exposure. And so if they're getting crushed in a particular book of business, they have the ability to say, we're not going to sell any more policies. We're just going to continue to,
Payout.
treat the policies that are currently in place. Or they can decide that they're going to change the policy. But again, they can't do that midstream. You have to wait until the policy term has run out. Or you can decide that you're going to get out of it entirely and run off that book of business.
Right.
And the impact is that they won't be as exposed as they were before and potentially save money for themselves.
To pay it back to the stockholders of the company. So what you're protecting is the stock of the carriers.
Hal, that's business.
Correct. It's business, but you also have to take into account the effect it has on the contracts that they've sold.
At this point, I think we're all done. And the best I can do to you is if you want to continue this discussion or continue to find some solution, we can interim study this bill and we can take it up next September. Okay? All right. Is everybody else uncomfortable with an interim study motion? Okay. Kill it. Okay. All right. All right. That is true. We could, this is, because it's an interim study motion. Yeah, we could vote on it now. Yeah, okay. So the subcommittee is, okay. This is business, this is insurance, right? Porcelli, Miles, Hunt, Thaxton, Sharissa, Gibbs, Gibbs is out. Spear, and Herbert. You know, evidently, back in January, you subbed on the insurance subcommittee, but I guess, all right, let's just do the whole committee. Let's just do the subcommittee of the whole. Okay, so who would like to make the motion? Representative Spear? And second, right. Okay, the motion is interim study. Is any discussion on the motion? Seeing none, all those in favor, please raise your hand. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Okay, 15. I hope so. Well, 16. I don't know. Somebody else counts better than I do. Okay. All right.
Can I make a comment before we start?
Yes.
Whoever sent the doggy around, I really appreciate it. It helped.
It's all right. Nothing like a comfort dog when in a stressful situation.
That was really good.
I was worried the dog would not like some of that strong words and language that was being used. But
Mr. Chair,
she handled it well.
Mr. Chair, can I just add one more thing?
Yes.
So, do we want to have a limit on each bill just because to get through them because we have 12?
Like I said, the only ones we have to get through
Okay.
are the early bills.
Okay. All right.
Okay. So the next one, let's see if I can find an easy one. Let's see. Is anything?
white bag it? What's the deadline? Next week.
Yeah, next.
Oh, 528's an FN.
Which one?
528,
528.
that's.
FN is not the
Burn
key.
cells.
Keys. Okay. All right. So, the 528 is not ready yet. We are working on an amendment that is going to be more disclosure. We're not going to try to ban it and make it illegal. We're just going to get disclosure, and we're going to try to make sure there's no stone unturned there, and that is in terms of that the lobbyist has to has to register, but has to we have to make it notified right up front whether there's going to be checks sent out to state representatives, because that's technically illegal for a company to do that. But there's some question that if that company gives a big fat check to a certain lobbyist, that lobbyist could be sending out the check. So in that case, that lobbyist needs to identify all their clients. Okay, so that if the Chinese company can't. Oh, excuse me. Oh, and the way we're going to write this legislation, it's not going to be Chinese. It's going to be any foreign country. So that's the concept on that one. Okay. And then 648. 648 is not an early bill.
FNs are early bills.
No, that's just not true. Let me educate you. Okay? FN has nothing to do whether it's an early bill or not. FN is that the bill was sent to a department to do a financial analysis. That may or may not be an early bill. Early bills, this is very important. This is great that I have a lot of people in the room, because a lot of people ask me this question. An early bill means that the subject matter, the something that was in the bill, had one of three things in it. It had fines, penalties. That means you'll go to criminal justice. It had an appropriation. That means it would go to finance. And third is that it had a tax. And therefore, it would have to go to Ways and Means. Okay?
Okay.
That's good. We got that
Thank you.
crossed. Okay. Relative to healthcare provider contract standards, 548. Let's do that one. Okay. So this was the hospital association worried about these contracts. Is that right? Is this your 548? 548. Who was proponent of this bill?
Rosenwald. And Ms. Brown.
Is this a hospital association bill? Yes.
So just very quickly, Mr. Chairman, as a quick refresher. So this is the legislation that came about arising out of concerns that when hospitals, predominantly because of the threshold of consumers that would be impacted, are at an impasse towards the end of their current contract, and as they're going through the negotiation process, there would be two predominant provisions. The first would be a public forum for impacted consumers to share the consequences of not getting a new contract to the two parties. And the second was reform to how the notifications are sent out to consumers in the event that it appears as though the provider is going to go out of network with the particular carrier. So that's your Cliff Notes refresher.
Okay, so this was St. Joe's and Anthem was the battleground.
Well, that was the latest episode, but I wanted to be clear that we have seen these types of situations not just impacting one particular hospital and not just involving one particular carrier, but it is the most recent public example of the dynamic as it plays out and what the bill is seeking to address.
Which one of those three make
Yeah, where would this bill go when it leaves here? I don't know. It turns out they just sent us a notice that there was no fiscal note done. But there is a fiscal note. So they're withdrawing this fiscal note, and this fiscal note was sent to the insurance commissioner.
Yeah, the original fiscal note spoke to whether or not there would be a cost behind hosting the public forums.
Okay,
And what I said was, because it's up to my discretion and because we have the space within our building to host it, the staff to host it, there's really not an added expense. So the
Okay.
fiscal note fell away.
and so so the fiscal note is meaningless now, but it is still an early bill, and I can't change that. Okay, so the question now is that in this you had given an alternative system of notification.
Right, so presently the carriers are responsible for sending out the notifications to their insureds. And again, the controversy around that is, are the carriers at times using those notifications, their legal requirement to notify insureds, to do things beyond just notifying them of the potential that they're going out of network or that they have gone out of network? And have they included materials in there that are seeking to bring the public into the contract dispute on their side and start putting pressure on one of the parties over the other? So to get at that, I was asked, and we drafted a kind of a two-option choice. The carrier can put their own notification together, submit it to the department for approval. We would review it to ensure that it is just, it contains just the important information that is necessary for the consumer to know. And assuming it does just that, we would approve it. It can go out the door, or we would put a standardized notification together, and the carrier can just use that, obviously plugging in their particular pieces of information.
So in this last case, did you have a problem with Anthem, what Anthem sent out?
So I reviewed after the fact the notification that Anthem sent out. 90% of it I thought was pretty straight up. 10% of it could have gone either way. But again, on the one notification that I saw, I didn't see anything particularly inflammatory. But again, I think it's important not to base a larger policy decision on one specific example. There have
Okay,
been some examples.
I
in
got the
past.
answer. So right now, if for some reason, if I didn't pay on time, I get a notification from my insurance carrier that says, the RSA so-so requires them to send a notification that I might be, my policy might be canceled if I don't pay. Is that correct?
That sounds right to me, yeah. Michelle says yes, so you know it's right.
Well, no, this is a case, well, no, they say I won't get renewed, or, I'll get canceled.
Yeah, if you
My
don't pay your
policy would be
premiums, you can't,
canceled.
yeah, that's right.
No, this is not about them losing money. They're not getting their check from me. I haven't paid them on time. I forgot to
Yeah.
pay it. I stuck it in my in folder and just never got around, and I didn't pay it on time. I didn't sign up for automatic pay, which is what I do with all insurance now. But if you're one of those people who didn't sign up for automatic pay, so there's no explanation, there's no anything in there, there's no throwing a cause about why I'm a bad person that I didn't pay on time. It just simply says is under this statute. So could we create a statute that requires all insurance companies to send out on a certain date that you're being officially notified by the department, whatever your language is here in this bill, whatever. How's
Well, I
that
think
for an idea?
Those protections, I think, already exist. There are notification requirements for consumers to be made aware that for whatever reason their payments aren't going through or their payments haven't been received. In the
Right, I'm
example
using
you
that as a
cited.
vehicle. I'm using
Yeah.
that as a concept because
So-
obviously this is a different situation.
Right.
The person has made their payments,
Right.
but that's not exactly correlated. In this case is that the company is the insurance company cannot honor the contract because they are going to lose this provider.
No, not necessarily. So, when a provider or a hospital or a group terminates a contract for whatever reason, either side terminates it, depending on the impact to the network, it could trigger a network adequacy review by the department. And that's when we ensure that they still have an adequate network to sell that product. Even if they didn't have an adequate network, they would still be required to cover claims that were out of network as if they were in network. So there are adequate patient protections there. Anytime there's a contract termination, though, the carrier is required to let the impacted patients know, by the way, this provider is no longer in network. There's also a 60-day period from when the contract terminates, where they can continue to go to that provider to transition care. But after that 60 days, they need to be going to an in-network provider unless there's some kind of single case agreement in place or they've gotten approval from the carrier to continue to go there. And so what this change would do would just specify kind of or provide some review of what that notice is looking like. Right now, the requirement is just that you send out this notice. This expands it so that we're reviewing the language of that notice to make sure it is incorporating all of those important things, because consumers, we're trying to take them out of the contract negotiation piece, but they still are impacted when this happens. And so they may need to transition care. They may need to know that when they make their next follow-up appointment, they need to switch providers to someone else. So that's part of what we would be doing, is reviewing those letters to make sure it's sticking to, what the consumer needs to know, and it's not, dragging into this contractual dispute.
So do we have text of what you guys wanted to write? Or
No.
This bill was just giving you rulemaking authority
That's
to write
right.
up the text.
We would design the form and rulemaking much as we did with the work that we did with No Surprises, with the ground ambulance proposal, things of that nature. It would be pretty straightforward. It would be pretty cut and dry. There would be open spaces where the carrier could put its name and obviously date and all of that. I would just add to Michelle's point, so there's a 60-day requirement for continuation of care. That requirement increases to 90 days if the individual has a specific condition requiring it. The one that I can think of off the top of my head that's pretty straightforward is pregnancy. We would want to give.
So that's going to be written into this letter that people are going to get sent?
That's correct. They would be made aware of the continuity of care provisions in
All
there, which
that- all
include
that
those
stuff.
60 or 90 days.
Okay, so we have no idea what that's going to look like at this point because you haven't had the rules meeting. Yep. Representative Spear.
I have a sample that Anthem wrote.
Yes.
And I wonder if it seems like it's pretty good, but I don't see the word pregnancy. But outside of that, it
No,
seems
I
like
was
it
using
covers
that.
everything.
I was using that as an example of when the 60-day continuity of care timeframe would increase to 90.
Okay.
It's when you're currently under a course of treatment. So if you're, you have say a surgery scheduled and that surgeon was in network, now they're leaving, that would be a huge imposition to try to reschedule all of that stuff. So that's why you have that 60 to 90-day period. And if you're, it's already scheduled or you're doing follow-up care or something, it's to, protect consumers so they can wrap up that course of treatment before having to transition care.
Now, I believe I've read the letter that you're referencing there, and when I read it, I was looking at it purely through what's in there. Is there anything that's inflammatory, trying to draw people into the dispute between them and the hospital? I did not review it to see if they had included that type of information. But that type of information, in my mind, is critically important for consumers to know. So that would be something that we would be looking to see if and when we were reviewing the notices.
It does say, in addition to federal law, your plan may allow you to stay with a doctor or facility for a limited time. If you are receiving certain types of care, please contact your carrier.
Yeah, that's not bad. I would want to see something a little bit more specific. With those 60-day windows. And I mean, obviously you don't want to have a letter going out there that's the size of War and Peace. But you do want something with a little bit more guidance.
If it's more than one page, people won't read it. Okay. Sabrina, do you have a different opinion?
Thank you, Mr. Chair. I just wanted to clarify that was supposed to be like a sample template. And when the situation calls for it, for the example of St. Joe's, we also had a microsite, and there's a lot more sort of communication with the members specific to their particular situation. And our position on this bill was that we felt it's unnecessary to do and likely problematic to do this sort of increased managing of these notices. disagree.
Yeah, but you know, when it comes to rulemaking, that's one place where you lobbyists rule the day. Because that meeting is just between you and the department, and you guys can get down and nitty gritty on the terms and fight it doesn't affect us legislators because we've just given the the department the responsibility of refereeing whatever you want it to say or not to say.
But the bill doesn't do that. It specifies what has to go in the notice, or you have to use a template that has not been developed yet by the department. So
Exactly. What can't go
it's
in
putting
effect.
that into statute. And I
Right.
just, I think because this came from one specific situation, I think that it's going to cause some issues logistically. That's just, prior to this, the last time we had
Right.
a termination with a hospital was in 2011. And we did not, St. Joe's is still in our network. That whole situation got worked out. So.
You're not making it selling this is so you're basically saying this has happened so rarely we don't need to worry about it.
Well, no, I think the way the bill's written, though, that there can be providers that leave a network for a number of reasons, not just major contract disputes.
Right.
And I think the way the bill is written, it's so broad, it could capture every single notice that needs to go out. And so one of the things we mentioned, I think, at the hearing was that if it's tied to that 1,000-member threshold, I think
Yeah.
that helps. Otherwise, if every single notice
Right,
has
no,
to go before the
so-
department, I
So
think
we
that
should
would
just
be.
pass this bill as it is because it's got that 1,000 in there.
No, that's not tied to the, respectfully, that's not tied to the section. It's unclear, at least, the section about notice. It reads, I think, that it would apply to every single provider termination. And so one of our comments was that if it could be tied to the 1,000-member threshold, that would help. Because I think the intent was to get at these sort of big contract disputes between carriers and
So
hospitals, which.
what words would you change? Because I see a may in here.
So
We might
I
even-
don't have it in front of me, but the second section that was added, the amendment that we did not see
Under
in
the
the
managed
Senate,
care law. Okay.
it's the second section of the bill
Yes.
about the notice that has to go to the
Yeah.
department. It's either we follow a template that has not been developed yet, or we have this sort of back and forth with the department. And another thing that we flagged, I believe, is that this prolongs the timing of when we can get notice out because there's a thank you. There's a back and forth sort of built into this language. We have 14 days to give the
Right.
notice.
That's the rulemaking. That's the rulemaking process, right?
No,
That would mean you would sort out that language, or you're saying
no,
it's too
in
specific in
statute.
here.
Yes, that it
So if we
dictates
just
the-
strip this all down to say the department needs to generate a rule about what's going to be in the notification?
I mean, I think that would be better than trying to put into statute the
Yes,
specific.
I
language.
absolutely
So,
agree.
Okay, thank you.
Notwithstanding that I came up with it, but yes, I agree. Because I hate when we get into telling how to do their job when it comes to rulemaking. Because like I said, you guys rule the day when it comes to rulemaking. I hear you don't even have to wear your orange badges when you go to a rulemaking hearing.
I don't know if that's true or not. I
No,
try to
I'm
wear
telling
one,
you.
but yeah. So
So-
just
Okay, so can the department put this baby on a diet and just simply
Thank you.
say that let's be focused on just that you're going to set up a rules hearing and how that process is? Yes. I need it for next Tuesday morning. Okay? All right. Let's do,
So wait, to summarize, we decided that the bill is very prescriptive, so we don't want that. It would be more appropriate to have, this in rulemaking, because when you have letters and dates, et cetera, these things may change, so you want it in rules to make sure that it's a little bit more flexible to accommodate and address issues that come up quickly, as opposed to this very prescriptive law and statute. Okay, so we're waiting for an amendment where it just says, see the rules, or, put,
they will
be in-
generate the rules for
okay,
for the notifications.
so. Okay, so we're waiting for that amendment. All right, thank
Right,
you very
and I know who's
much.
going to make the motion to accept
The amendment? Well, it's not here yet. Thank you.
Okay. All right. So I have the dog amendment here. The problem with this amendment is that it's many, many pages long. and it's 6 pages long. And I dared to go through it line by line. So what I want to do is distribute it to everybody, make sure everybody has a copy, and all the people who are in the room have a copy. And that we'll take it up on Tuesday, but we can talk about some of the general things that we have done to it, and so we can pick up any particular issues that anybody has. Okay. I hope I have enough copies.
Can we get a comfort dog here permanently? Please?
So, yeah, this is, so at this point, yeah, 548, we've just had a discussion and we'll, and recommendations for a new amendment.
John, you got Tuesday and Wednesday next week?
Yeah. We technically have, we have Tuesday and Wednesday, and I'm not supposed to say this, so I'll turn my.
We're not gonna go over this in general?
I want to give everybody a chance to read it. So assume you can multitask. Okay,
All right, am I
So-
recognized?
you're on.
So just want to acknowledge the timing of this. We got out of here at 5 PM yesterday, and the hearing yesterday was almost 2 hours long. And I had to eat and sleep and do all the other things so I had a limited time. But I have an amendment.
Okay. How many
It's
copies?
probably not enough for the whole committee.
Can you email it?
I've emailed it to Kristen, but
Email it to the committee members.
I've emailed it to you and Kristen printed some out.
Kristen, can you email it to all those people who have computers? Keith sent you an amendment to 482. Yeah. but
Oh, you all have a copy?
We all have.
Oh, I
copies.
didn't realize. Thank you.
Oh,
I thought it was
yeah,
just
now
a-
I understand.
All right,
Ah, okay.
we're on the ball here. Thank you.
How many extras? How many extras?
I have 2 extras.
Oh, thank you.
Okay. How much of the extras did we get? John, did you get more than one copy? Okay. All right.
I don't know if I have.
Okay. How many other people got one of these?
Let me see. Let me make sure I have. This one. Okay, good.
Okay, thank you.
That's the wrong place. Yes, I got it.
I-
So, disclosure, did you use yours handy dandy?
Absolutely,
Yeah.
100%.
So awesome.
Yeah.
Look at this. Well, Keith, you did a fabulous job for just.
Well, it's not just push a button, right? Like, took a few hours.
Figure out like what to tell it to do. This
Yeah.
is fabulous. This is like a work of art.
It's
Yep, I got a copy. Everybody's good. And we're making more for,
So it started with the Senate's version of the bill, and I used some software tools to look at what the other 50 states are doing. And so we've put a lot of effort into having New Hampshire be a leader in digital assets. It's going to be a big part of our economy in the not too distant future. So my concern with this bill is to sort of set us back on that the leaderboard of other states. So that's one consideration. So looking at what the other states are doing, there's a table in the back. The data is not up to date exactly to today, but it's close enough. Analyzed all the language of the other 50 states, compared it to the Senate version. Analyzed the testimony from yesterday, so almost 2 hours of testimony. All the key points that were made in that testimony are considered and put into the language of the amendment. And also industry feedback, because we don't want to snuff out the industry by making the regulations too onerous. I guess the key of it is in the definitions period, you'll see item 4, the new customer definition. So if you read that new customer definition, that will help you understand. That kind of unlocks a lot of the rest of the language. But I'll just read it because it's not very long. New customer means a customer whose identity was first verified by the operator fewer than 5 calendar days before the transaction in question, measured from the date on which the operator completed its initial identity verification procedures for that customer. So that's a key period and moment in time. If you'll go to,
so let me just understand
Yeah.
what that means.
sure,
So that means, if, in terms of the scandal that we said, so somebody's just been told, they think they're sending money to their long lost nephew. And so do they go walk to one of these machines? Can they do this verification in front of one of these kiosks?
they do the verification.
They do the verification.
Yeah.
So, so then when they put in their verification, they would have to wait 5 days before they can make their first
No,
deposit?
so there's a 5-day period. They can make multiple transactions in that period.
Okay,
Each transaction has a 72-hour clawback window. So you get to say, I want my funds back and my fees back for any transaction made in that 5-day period.
okay.
And, I think the operator could set limits, just like a bank can set limits on their ATM. So maybe they only limit it to one transaction in that period, but it could be multiple according to this bill.
And multiple means you can't keep sending to the same account. You would have to be sending to a different. you
Just,
have to
I
be
think
on a
just
different
the
Bitcoin
interaction
account.
at the kiosk, the interaction. So
Okay,
a transaction would have 72-hour, for any reason, full refund within that period. right?
72 hours.
And so the
And
burden
it's
on,
only because it's a new customer, not someone who's scamming.
right, because the new customers are the
Scamming the
gullible
scammers.
ones. They're not really savvy about this stuff.
Okay,
The risk for so the way digital assets work, it's not like a credit card where you can claw back the funds. It's a final transaction. So once the funds leave the operator, there's no way of getting them back. By design, you can't, it's like cash. It's like if I gave you
understand.
cash and you walked away with it. So having the operator hold those funds for 72 hours, it puts somewhat of a burden on the operator because the value of the funds can change, right? It's the market value. It could drop, it could go up and down. The operators are concerned about being scammed themselves because someone could, make a transaction, and then if the price goes up, they keep it. If the price goes down, they call it back, and they can scam the operators that way, right? So that's another concern. But then once the 5-day period, once a customer is no longer a new customer, then there's safeguards in place for. Let me just pause there on the new customer. So page 2, 358U4, core customer protections. That's really what we want to focus on there. And that's explains basically what I said. And while you're a new customer, there's a limit of $3,000. You can't do more than $3,000 per transaction. So it puts some boxes on the new customers that are coming in that may be more naive and susceptible to being defrauded. There's an inflation adjustment that $3,000 is adjusted for inflation annually because we know that can go up and down. That's letter C on page 3 there. And then the fraud warning screens, fraud warnings and screens, there's specific language that they have to put. Like for instance, in letter A there, they have to make it clear and understood by the customer that no government agency, law enforcement body, court, utility, bank, technology, support service, employer, or retailer will ever demand payment by a kiosk or crypto ATM, and that the digital asset transactions are irreversible and that losses due to fraudulent or accidental transactions may not be recoverable. So there's some disclosure requirements there. And then because they all have basically an iPad on the front of the screen, that's, they could update software remotely. There's some requirements for the checkout process, right? That there's warnings in that process, clear and obvious, so that a person is being educated at the kiosk about the potential dangers. I can't go into all this. Blockchain analytics and fraud, anti-practice, that was in the Senate bill. And some of this is borrowed from the Senate version. Just the replace all was easier. There's fee and pricing disclosures, so the fees are clearly displayed to the user, so they know exactly what they're doing in that transaction. And then they have to get a receipt that has all this information in it. The operator's legal name, toll free. I'm on page 4, Roman numeral 5. So they have to get information about the operator, the location, the date and time, so that there's an evidence trail in case something goes wrong. They know exactly what happened. Yep.
It's a question. The spread is as a percent. Is there any limit on that?
No, it's market forces.
Why do we have this paragraph? I don't understand why we need to worry about inflation.
What?
The 3,000, this whole inflation thing, this is
Yeah.
about the 3,000?
Yeah.
Good. So, yeah, what's
So we
wrong?
don't. So the language is evergreen. We don't have 10 years from now. We don't have to worry about $3,000 not being worth right now.
No, I think the people who are worried about getting scammed, it's better because the dollar, because $3,000 won't get you as much. So at least they won't be scammed as much. I mean, I would think we wouldn't need that.
I
that-
personally, I think anytime we put a dollar amount in legislation, it should have an inflation adjustment.
Okay. All right.
That's my feeling.
All right. So,
Yeah.
but the
Or
other
maybe
question I have is that, and I love this idea about worrying about the first transaction.
The new customer is considered
Yeah, exactly.
the first 5 days.
So-
When they verify their identity,
When-
that's when that
Yeah,
period
exactly.
starts.
So I want to pick up on that. So when I sign up for having them take money out of my checking account, okay, that usually it's like it's a small amount of money, and then they have a transaction that goes through
Yeah,
to
we talked
confirm-
about that with the operators.
the small. So in other words, that
So there's like
the
2
first, notwithstanding the $3,000 being your first actual thing, but I think that when you sign up as a customer, that you should also you should have a very small amount transaction, to occur rather than,
So,
that's why I said.
Let me see if I understand what you're saying. So sometimes when you sign up and you link your bank, the
Right.
bank or the vendor will put, I've experienced it, two tiny penny transactions. So let's
Exactly.
say 61 cents and 39 cents.
Right,
And then you have to wait a day or two,
and then.
and then you got to type that number into the vendor to prove that you own that
Exactly.
account. Okay, so in the blockchain world, there's something called the Satoshi test, which is similar to what you're talking about.
Okay.
And we talked to the operators about the Satoshi test.
Yeah,
Because every transaction incurs fees on the blockchain,
okay,
that there's some overhead to that and there's some logistical problems with that. I think that would be an undue burden to impose on them at this point, but we
well,
could,
how much bad is the fee? How bad is the
it
fee?
depends on what blockchain and what, how much congestion there is on that blockchain.
That
It
day?
varies. Yeah, it could be $1 to send a fraction of a penny, right? So
Okay,
on some blockchains. Depends. Some of these machines it's like a vending machine, right? You don't get
Yeah.
soda out of it. You get Ethereum or Solana or Bitcoin or whatever the
we
digital
get
assets are.
different kinds of sodas.
Different kinds of, it's Coca-Cola and Pepsi.
Yeah,
right?
different
There you
kinds of
go.
sodas. Okay.
So we
All
considered
right,
that,
so,
but I don't
right,
think
there's
it's,
a question over
yeah.
here.
I've been unfortunately personally involved in one of these scams, not because I wanted to be.
With the vending machine.
And
With the
not
kiosks.
not this vending machine, but the type of people that run these scams.
Yeah, but this bill is really about the kiosks.
Okay, but what is not taken care of here, in the case that I was involved in, the bad guy convinced my aunt that he was her grandson,
Yeah.
So that was sort of the scenario I just gave you.
and walked her to the bank, got her to take the money out, and then go over someplace and deposit the money where he wanted it, into a
How
house
long
or
ago
something.
did this happen?
Just a couple of years ago.
Okay, because
And my-
since then, we have passed a law where if the teller
But that's
can
not the,
sniff
that's
out
not
a
the,
rat-
that's not the point.
Okay,
The point of this is, without a cap, you have no idea how convincing these people are.
Without a what?
It's
Cap.
unbelievable.
okay.
They'll-
Cap. Well, that's why the cap is 3,000.
Yeah, that's why we have a cap.
There is a cap?
Yeah.
3,000.
But only on the first,
On the first
could you show me
transaction.
where it is?
Yeah, so,
there it
so I remember I said the new customer definition is the key because it defines the period of time. So you go to a kiosk, the kiosk asks you to verify your identity, and we can have someone from the industry explain exactly how they do that. But they get a picture of your driver's license, they verify your identity. At that moment in time, a 5-day clock starts. Okay, no problem. That's all right. That's all right.
I have a
But-
question.
Okay,
Yeah,
right.
So I'm just curious how you settled on a $3,000. It looks like it would be among the highest of them all, but if our fear is that the people who are new are just less sophisticated and more prone to being scammed, which that may or may not be a fair assumption, I don't know.
Mhm.
But if that's what our fear is, then like, maybe there should be either some sort of waiting period or less than 3,000, because presumably you can do
There is a
3,000
waiting
to multiple
period. There
machines.
is a period where they get the
You can
money
get it back, but
Get
it's
the
only
money.
72 hours, which it might take longer than that to figure out. So
Right.
if we're trying to limit the damage that somebody can get, and we know that, what, did I hear yesterday, there's 12 different companies or something like that in the state?
there's at least 9, but there could
Okay,
be
so we'll
12.
go with 9. So if
Yeah.
there's 9, I mean, 9 times 3 is 27,000 if somebody, because it seems like the natural loophole, if I'm on the other side of the scamming call, scamming you,
Yeah.
I'm going to say, I'm going to have a map out. All right, I can get 3,000 at this machine, 3,000 at this machine, 3,000 at this machine. And if these people are really that manipulated by these people, that seems like a lot. I wonder if
So,
3,000 feels high for the first transaction, if we're trying to protect
So,
those two
I
people.
mean, everything's negotiable, right? The other side of it we have to consider is these companies want to get new customers, right? So if
Mm-hmm.
we put too many burdens in place of getting new customers, then it kind of stunts their,
But it sounds like it would be a 3,000 or a lower than $3,000 cap is what I'm suggesting and throwing out there for us to discuss. And if it's just, if they're worried about customer, presumably they could put in $500 and then they can come back in 72 hours and now they're a fully fledged customer or whatever.
no, there's a 5-day waiting period.
5-day wait. Okay, so they
Yeah.
come back in 5 days.
Yeah.
and then they have all the rights that everybody else has. I mean, that to me doesn't seem like a particularly burdensome thing. I can't imagine people are not going to. If I want to become a customer, the fact that I can only do $500 for the first 5 days, and then after that I have freedom to do whatever I want, that doesn't seem like a huge burden. And if we're worried about people who only would go here because they're being manipulated, because that's essentially what this is saying. You're saying that sophisticated current users are people who are unlikely to be scammed, right? That's the assumption built into the way this amendment's written.
Right.
So my thinking is if we had a lower number, then we are protecting people in a better way than we are under this. That's sort of my logic here.
I see what you're saying.
And I don't see that if, I think that $500 or $3,000, there's a cap, right? If I want to get into crypto and I want to use these kiosks, I can't imagine $500 or $1,000 versus $3,000 is going to be the deciding factor of whether or not I choose to become a customer.
Okay.
And it does provide a little bit more.
So I think
protection.
the Senate bill had 2,000, and looking at what the other states were like, and the testimony yesterday, that's where the 3,000 came from. But
Yeah.
it could be 3,000 total for the 5 days, or, we could, you know what I mean, instead of per transaction. I don't know, but I'm open to, and maybe we could hear from some people that are here about what they think about that. And there's some other things, and this is it's not something I can go over in just a few minutes, so we're going to need to digest on it.
Right, right.
I mentioned the fraud warnings.
But you're giving us the highlights,
Yeah.
the things we, so.
The blockchain analytics is something that it's in a lot of the bills, it was in the original Senate version. So blockchain analytics is, there are companies, TRM, Eclipse, and Chainalysis are the three big ones. If you give them an address, they can trace where the funds flow, right? And sometimes law enforcement can trace those funds to an exchange, like a Coinbase or a Kraken or a Binance, and then contact the exchange to prevent that money from going to the scammer and having it sent back to the. So that's a tool, but it's not a silver bullet. Highlights again.
I just have a question, if I may.
Sure.
Yeah.
Yesterday, we saw the testimony from PD, and many people, they are saying that this particular kiosks are being used for the scams. So do you have any kind of a statistics in last 3 years? How many actual legit transactions we have with those 9 machines? Because yesterday we saw all the testimony, it's all scam. Everything we're talking about the scam. So if we are having a legit use of this kiosk machine, we can try to do the things. Otherwise, scammers are going to use it as per your new rule, and they will find out a way to scam old people.
Whatever we put into law, the scammers are going to adapt to. That's just how it's going to be. So what can we?
My question is, what is the legit use of this kiosk machine in last 3 years?
What is the what you
What?
use?
Legit use, legitimate
Legal,
use, yeah.
legal use.
Legal, yeah. Legitimate use.
Legitimate.
Yeah. I don't have an answer for the machines in New Hampshire.
But this is
I,
where we are.
I would have to say
So-
if it was only illegal or bad transactions, then the machine would have been pulled by the provider. In other words, there's no benefit to the provider to keep having complaints about that machine. So I mean, in terms of because we actually have, there's been a turnover in actually people who have these machines in the state. There are people who've been in this business and got out of it. So it's not evidently that's the best business to be in anyways. The fees are higher, right, than regular deposit.
So the fees are higher than maybe an online exchange, and there's reasons for that. There's a hardware device that costs maybe $10,000. They have to rent floor space from the the convenience store, wherever it's located. They have to hire an armored truck to come and take the cash out. They have to sell the cash to the Federal Reserve at a premium. There's a cost to do that. So the fees are higher because the operating costs are higher because it's a physical location. So
But again, I will go back to my old question. Do we have any data about how much is the actual use of this kiosk machine, which we intended it for in New Hampshire in last 3 years?
yeah, so the industry has some data on their own, and it's like 1.5% that they track the fraud. There's a statistic out of Utah, I think it is, but there's no methodology or backing it from it. So I don't trust that statistic.
Because I'm interested only in New Hampshire because that is where my constituents are getting
Right.
impacted.
Right.
Is one of these machines in Nashua?
One of this machine
There's
is not in
probably-
Nashua, I
there's
don't
probably
think.
several in Nashua.
Yeah.
One in Derry.
Yeah.
I know that.
But the thing is, definitely people are talking about it, and it's being impacted for all 60-year-old and people, and they are being always more easy to get targeted. And if whatever the rules we will put, it's not going to basically help them out. Scammers are more smarter; they will try to work around those rules.
What's your solution?
My solution is at this point, we should not use this machine.
You want to ban the machines?
Yes, I would like
Okay.
to.
I strongly disagree with that.
Yeah.
Let me just finish the highlights, all right? Page 4, data privacy, that's another aspect that is consumer protection. So there's limitations on the data collection, and maybe we want to strengthen that. There's a preemption clause, and I believe that was in a version of the Senate bill. But it's basically the rules locally can't be more restrictive than this one. So it prevents like a wild west of regulatory schemes that down to the municipality level that would be impossible to comply with. And then there's remedies. So it would be put under the consumer protection statute. I won't go into all the details of that one, but we would probably want to get feedback from Brandon on that one. And then there's a severability clause, which is sort of boilerplate. So that's the highlights of it.
I have a quick question. Keith, this was great. Thank you very much. And I thought the chart on page 7 was particularly helpful, 6 and 7. It's a summary. So I just had a couple quick questions on the chart on page 7. There's 3 categories: licensing, refund, and fee cap. Can you maybe explain why we're doing none? And do you think we should have some type of licensing, some type of refund,
So,
and a small
yes.
cap fee?
So what you're talking about is on page 7, the 50-state legislative landscape. So this is an analysis of other state enacted or signed by the governor or delivered to the governor, proposed, not yet enacted. Some states put a fee cap in. So you'll see, a fee cap. My position is that we should let the market decide the fee cap. If we have a competitive market in the state, that they'll compete with each other. So that would be my response to that. Now, the licensing piece, in 2017, we passed legislation to exempt virtual currency from money transmitter, but it didn't involve cash to crypto. So the money transmitter piece doesn't really apply to New Hampshire in the same way it does other states. So maybe that we have to dig into that a little bit more. But that's why that was left out.
And then the refund, I thought we had something for refund.
I think it's a refund after the new customer period.
Okay, thank you.
That's after the funds have gone out. So there's a refund up for that 5-day new customer period.
And
So
this would make us fairly competitive with the other state,
Yeah.
or very competitive.
that's right. And if you want to see the side-by-side with the Senate version, you can look at page 6. So that's sort of like the distilled version of the changes between the Senate passed version and this amendment. So there's a lot to digest here. I don't expect everyone to get through it right now.
You
and
have the whole weekend to
There's more discussion to be
think
had,
about
so that's my best effort in less than 24 hours.
Okay. So the way you want it, yes, we'll absolutely revisit this and come Tuesday and yes.
This is a curiosity question. On the list of states that you have here, I notice you don't have Vermont, Massachusetts, California? Is there a reason why we just have this limited to a specific color of state? Except for Illinois.
What, does Massachusetts have these?
I don't know for sure, so it was hard to go over all 50 states in a couple.
Does anybody know whether Massachusetts hasn't, but,
Does not, maybe it doesn't.
right. Right.
So there's some industry folks here, would you have them come up and explain like how the onboarding process works? You know what I mean? Like,
Well, I mean, was that presented during the hearing?
I don't think specifically, but that new customer period is kind of the key to the whole thing, so how
Okay.
does someone become a new customer?
Okay, I don't mind to have someone's gonna handle that, but it's gotta be like 5 minutes. It can't be,
Yeah, no.
but who do you wanna have do that?
Someone from the industry here could explain how the onboarding process works so that we're clear, okay? You volunteer?
Okay. Thank you.
Hi, Larry Lipka from CoinFlip. I spoke yesterday. So the onboarding process at our kiosks, it can happen at the kiosk where there's cameras. So you're taking pictures of the customer at every transaction. So we have multiple photos of them. And there, the camera can also be used to take a picture of the ID. But we go one step beyond that. We do ID verification. Each company can use its own third party. We use a company called Verif. So then you get a text message to your phone to start a process where it's like if you've done Airbnb or any other mobile applications where you have to verify your identity, you take a picture of your ID, both front and back, to make sure that it's a real ID. They have a lot of data points to make sure it's not a fake ID. And then they use biometrics to confirm that the photos that you're taking of your face while you're moving from left to right match the ID so that we can verify that the ID is legitimate and that the person matches the ID.
So you have to get past that check.
Right, but we know it's a little old lady. You'll have great pictures of the little old lady, but we don't, at the end of
So-
the day, we want
Yeah.
pictures of the person
And then,
who's being sent to.
well, so they verify the wallet, so that's the second piece of it, right? So
Yeah.
the wallet address, so the blockchain analytics, if a person is being scammed, I kind of bristle at the idea that everyone using these things is being scammed, so.
Right.
But let's say in the rare
Well, I mean,
instance,
to
in the
hear-
rare instance that someone's being scammed and they present an address of a wallet that isn't theirs, that's where the blockchain analytics kick in. They can check that wallet to see if it's tied to scam and fraud activity using blockchain analytics and block any transaction going to it if it's flagged for being a scammer's wallet.
That's correct. And so what we do is two things: wallet pinning. So that means if one customer comes up with wallet X, we'll call it, no other customer can use that wallet because we know that that customer, Larry Lipka and myself, is using wallet X. If, Rep Ammon comes up to try to use wallet X, we would block that transaction and block that customer from ever transacting because they're doing something, either they're wallet sharing or they've been directed by somebody else to use a wallet that's not theirs. We also at the same time verify that the wallet has not been used for any criminal or fraudulent activity in the past. Through blockchain analytics, they give us a risk ranking, a score. So if it's a high risk wallet, we block that transaction and we block that customer from transacting further so that they're not sending to a wallet that's been associated with criminal activity. Unfortunately, with crypto, you can create a new wallet that does not yet have a risk score associated with it. So the wallet pinning and the blockchain analytics won't catch everything. But when you have all of these tools together, all of these protections, you will be protecting, 99% plus of customers from being defrauded because you've got the warning requirements, you've got, customer service where they can call if they have questions, wallet pinning, blockchain analytics, and you also have that hold period for new customers. So the new customers are the most vulnerable. Those are the ones that we see falling for those pressure scams because they haven't used the product, they may not know what they're doing, they got someone screaming at them on the phone, but you can't have someone screaming at you on the phone for 72 hours. So that 72-hour period, the person goes up to the machine, puts in some money, they leave the kiosk, they leave the store, and then they have a time to think. And they think to themselves, well, should I really be paying the FBI? Or is my granddaughter even in Mexico? Why am I paying her bail? So that 72 hours is like a cooling off period where they have 72 hours to talk to somebody else to think, and then they get a full refund. So there is actually no harm for that customer because we'll refund them the full amount of the transaction within a reasonable amount of time. I think this bill is maybe like 5 days, I think is what it says. I just got a copy of it. But that means that there's no harm for those new customers at all. So, and one of the other questions questions is, are there any legitimate uses? Our data is that the scam rate is 1 to 2% at our kiosks, depending on what you look at. That's both through our own internal data, and the blockchain analytics companies give us a scam rate every month based on everything that's happening out of our digital wallets. They analyze it, and it's 1 to 2%. So those rates out there of like 95, 99%, I've not seen the methodology. It's
So
not correct.
humor me for a moment.
Of course.
Given that you can make this with deposit and your home computer, you can take money out of your home, out of your bank account, and you can blockchain it to one of these, and the fee is lower than going to one of these machines. So are you going to tell me that the people we need, or are we doing this to keep the machines out there just so we can say we're the best digital asset state in the union? Or is there really a lot of customers who suddenly have a $3,000, they have lots of cash in their pocket, and they want to run around and find the nearest one of these machines and deposit it, and not wait until they get, or not put it in the bank, wait till the check clears. Well, I guess, and or the cash. I mean, I don't know. Is there a cash delay at my bank? I don't know if
This was
there's a cash
addressed
delay.
yesterday during testimony.
So what is the compelling reason why people are willing to pay more to put deposits in these machines?
Sure. So people in America are willing to pay for convenience. You see that everywhere. You
Yeah.
can go to Costco and get a membership and wait in a long line and get eggs at half the price as the corner store, but you waste 45 minutes and you have to have a membership. So that's the convenience factor. It's also there are people in this country.
Well, I
who
don't see
just
that
use-
scenario here.
People only use-
that doesn't make sense.
So another-
Costs 10% more because it's a convenience store, right? Like,
Right. And there's the convenience. So another demographic is the people who use the currency exchange booths at airports. So I don't know if anybody on this panel has ever gone to the airport and exchanged
yeah.
$50 cash or $100 cash for pesos or
No, I go to the ATM.
So it's cheaper.
I always
it's
go to the
cheaper
ATM.
somewhere else,
Yes.
right? But those currency exchange booths
Yes.
at airports exist in every airport, and there are people who use them because they exist, and you're paying 20 to 30% over the market price. You could just go use your credit card. You could go to your bank and get it cheaper, but not everyone has a credit card. Not everyone has a bank. Some people have to use cash. And then in a state like New Hampshire, there are people who don't want to give their financial information, their bank account information to a crypto company. And I don't blame them, because there was FTX that went bankrupt and committed fraud, and their CEO's in prison because he stole people's crypto. And there are hacks all the time of companies where your personal data and your bank account information is stolen. So a person who is new to crypto, who does not trust a company yet, does not want to give their bank account information because they don't trust us yet. So this is a convenient way for them to buy crypto with cash and also not to give us their bank account information, so that if we are hacked, their bank account information is safe. And for people who are new to crypto, that is a
Okay.
big value
The
proposition for
anonymity
them.
of the machine. Okay.
Yeah,
Because then
not
the other problem is,
anonymous,
if you don't
but-
have a bank account, how do you get cash in the first place? In other words, these machines don't spit out cash.
Some of ours do. We have two-way machines where you can sell crypto and get cash. So, those do better in vacation destinations where people are going and want to sell their crypto to buy cash. Most of our customers still are just buying Bitcoin to hold on to it as an investment, so they're not selling it. So I'm not sure if I answered.
Well, let me
the
answer.
question.
Yeah, that was great to hear that they do have some.
Yeah.
Well, I'm just wondering why we shouldn't mandate that they have to pay cash, because I bet you there are higher standards
they're more
of
expensive machines, right?
regulation to this machine that to pay cash out. Remember, it must be it's got to really make sure that you have that cash. It's got a way to monitor it, and it's probably a more sophisticated and expensive machine.
Yeah, the machines that are two-way machines are more expensive.
How much more
Um,
expensive are they?
I think they're like double the price, but I don't know exactly. I can get that information to you. I don't know the price of the two-way machines. But, the thing is that, 95% plus of our customers are buying crypto. So there's not demand right now for people to be selling crypto. If there was that demand, we'd have more two-way machines, but it doesn't justify the cost of it right now when the demand is not there.
Right. Well, you use the example that people don't have bank accounts.
Correct.
So
So and there's another aspect, the custodying of the asset. So that's something that is a little tricky to understand. But if you buy from an exchange, they're storing your crypto for you. They could deny sending it to you. They could, like Coinbase is one of the biggest exchanges. It crashes all the time, right? So there's periods of time when you want to
you don't want to do
purchase.
business with them.
I'm not going to comment anymore on that. But so there's like technical problems that prevent you from getting your funds. But with these machines, they're sending the crypto to your wallet that you control, possess. So it's like someone handing you cash in a digital form. So the custody aspect is different too. And some people prefer to custody it themselves. It gives them more control over it. So.
Okay. All right. Any other questions?
Just a quick question. Can you use a credit card at these machines or it has to be cash?
So our machines are cash only. I know that some of our competitors, you can use a debit card as well. And, some of our best performing machines are actually next to an ATM. So it's not all people who are unbanked or underbanked or, some
You could take it
people,
out of your
they take it out of
ATM
the
and walk over
ATM. They
and
take it out of a
feed it
traditional
into the
ATM and put it
system.
into our kiosk
Okay.
because that's like the convenience factor.
Got it.
It's easy. And we have 24-day customer service. I've looked at a lot of testimonials. We've been collecting some for New Hampshire, and almost everybody says they like the product because of the convenience. So that is, I see it at a hotel last night. The gummy bears in the mini bar are triple the price. But when you want the gummy bears right away, you'll pay that price rather than, drive to the store. So that is something Americans really value is convenience.
Yes, Representative Spear.
Listening to you, it sounds like this stuff is almost perfect. Can we hear from the AG's office about why it's not perfect?
Well,
And that's not what I'm saying. I did say that.
But it sounds a lot like it.
I'm an attorney,
He's
so I
obviously
say things in a nice way,
correct.
but I will freely say that scams happen at these kiosks, just like scams happen everywhere. You have to do a lot of things to prevent people from doing something they shouldn't, and that's what this bill does.
I'm kind of tired of hearing, well, unless we get everybody, we shouldn't do anything.
That's not what I
crazy.
said.
No,
Don't-
she's agreeing with you.
Okay.
Yeah.
Well, that's great. I agree with you then.
Okay, so-
I think that.
all right. Thank you very much.
This is a real problem.
is a
You
real
heard
problem.
yesterday that people have lost, I think it was something like millions of dollars in our state, which isn't a very big state. I think we have to give this
we
more
hear from the
reality
AG?
than
Okay.
what we're hearing
So
here.
I see Brandon's here. Brandon, were
Thank
you
you very
here
much.
yesterday? Because I missed yesterday. I missed most of the day. So you did testify already, and were you here when he testified?
Yes, and it doesn't sound anything like what we've been hearing.
Well, obviously you were hearing from a proponent, and obviously the Attorney General's.
Well, he looks like he's ready to say something, and I'd like to hear it.
Okay, Brandon, you got 5 minutes to tell us what's wrong with this amendment in front of us. How's that? And I guess if I would start out would the right answer being is that we should just ban these from New Hampshire?
I was asked this question yesterday.
Okay,
I am authorized on behalf of the Attorney General
Yes.
was authorized to support SB 482 in the form that it took yesterday.
okay.
For the record, Brandon Garrod, Senior Assistant Attorney General, on behalf of the Attorney General's office. I am not authorized to take a position on behalf of the Attorney General as to whether these machines should be banned or not. If that's something that this group would be interested in, I'm happy to ask the Attorney General and come back next week with a formal position on that. I'm not sure what he will say. I can't discuss that today. If you'd like my immediate reactions to this amendment, I'm happy
Yep.
to give them.
Yes.
I've looked through it quickly. These are quick reactions, so take them for what they're worth. Something is always better than nothing. I think that the bill that in the form that it took yesterday was much stronger. This is better than nothing. So you say, will you come up and tell me what's wrong with this bill? This bill is a significant step in the right direction. I mean, it certainly is. Currently, today, there are no regulations other than general prohibitions against unfair and deceptive acts or practices that apply to anyone that's engaged in trade or commerce unless exempt. This puts additional requirements that would make it slightly better. It's not going to solve the problem. It's less protective than what was here yesterday, so I can't take an official position on it on behalf of the Attorney General. I'll have to run this by him. A couple of reactions, in terms of what the cap is going to be, 2,000, 3,000, something more, something less. I can't tell you what the right number is, but this has a cap on a single asset transaction. It also creates a 5-day waiting period or a 5-day period that's a new customer period, and then has a 72-hour period by which those new customers can report fraud or request a refund. So I think that in order to make this cohesive and as protective as possible, using a cap of $3,000, the $3,000 cap should not apply to a single transaction. It should apply to transactions within that 5-day new customer period.
Good point.
That would avoid the problem of
That was the
somebody.
intent, and they
Yep.
just didn't. Yeah, good pickup.
I think it's probably also worth considering, so you have a 72-hour period for a refund request. You also have a 5-day period for new customers. I mean, aligning those two periods to make the refund period 5 days, the new customer period is 5 days, the refund ability to request a refund is 3 days. Making those consistent with one another would be a logical thing that I think would make this a little bit more protective than it currently is.
Can I ask about that? The thought on that? Because I agree, it's a little confusing unless you think about it. So let's say we had a 5-day new customer period, $3,000 cap for all transactions, and that could include multiple transactions, right? For a maximum of 3,000. Let's say you made your most recent transaction at the very end of that 5-day period, and you had a 5-day refund period. So that would be like a 10-day kind of window altogether, right? Are we on the same wavelength on that?
I think
Is that
so.
what you're saying? Okay.
I think so.
Well, in other words, the first day you do 100, and you do 100, 200, 300, and then the last day you do 1,500.
Yeah, so so it would be, if we change the 72 hours to 5 days, hypothetically, right, just talking it up, that last transaction would extend beyond the new customer period, but it would end at that 5-day period that begins when the transaction happened.
I'm not sure that I follow, but
Okay.
I think that to the extent that my point is that, if the legislature identifies, 5 days as the period by which we want to say, all right, you're verifying identity of this customer for the very first time. So this specific customer is identified as a new customer. New customers are more susceptible to fraudulent use of these machines than existing customers. So therefore, we've decided that 5 days is like a reasonable period to define what constitutes a new customer. A similar 5-day period for the ability to request a refund, in my mind, makes sense.
Well, the
Following
next-
that logic of, during that first 5 days, folks are vulnerable.
Right, but if you said you can't make a deposit in that first 5 days, that all you're doing, you're getting verification as a customer.
No, you're initiating a transaction, but the funds are being held by the company before dispersing it. So they're holding on to it in case
Right.
you want to, so you won't receive the funds in your wallet until that 5-day has lapsed, unless you request a refund.
Okay. Right.
And so the other side of that is it locks up funds on the company side. And then we have to worry about the companies getting scammed themselves, right? Because someone could see what the price does, and if it goes way down, they could request a refund, and they actually made money on that because they have the same, or the other way.
We don't
around.
want these crypto companies to be scammed
Right, so-
themselves.
Right.
Well,
Because of this
I guess I don't understand that logic. I mean, you
The
could
price fluctuates of the asset, right?
but you
So-
could easily put something in here that makes it so that the purchase price is the maximum refund amount that
Maybe
a
we need to
customer
do
could
that.
get.
Maybe we do
If
that.
that's a
Put that-
concern, that should be very easily fixed, I would imagine.
Put it in maximum, yeah,
So it would be whatever cash amount they send
Whatever
is
money,
returned.
right.
Okay.
Which,
That-
this is a consumer protection
that's
statute.
in spirit of our
That's-
consumer protection law.
That's right.
Exactly, we make you whole.
There's still if I could just linger on that, there's still a risk there because the asset has a value too, right? So the asset price fluctuates depending if it goes up or down in that 5-day period. The person could request a refund because they'll end up with the asset, which has a value, if they don't request a refund. You see what I mean?
No.
Okay, we can talk it through the.
Okay, so you are available tomorrow, Friday and Monday? Are you around?
Generally Friday and Monday,
Okay,
like all day.
okay, so
I-
could you give him?
I'm happy to connect with
his
anybody.
your direct phone number so he can talk.
Oh, he has my contact.
Yeah,
You have the direct phone number, right?
yeah,
Okay.
The other piece that I think is worth mentioning, there's a data privacy component of this bill. There's a data privacy statute 507H, which is incorporated into the Consumer Protection Act, which applies to data privacy requirements for anybody who processes a certain number of New Hampshire individuals in a current calendar year. Having this data privacy minimization is a great thing. It minimizes the amount of information that consumers can unknowingly release without really fully understanding the impact on that. But there's a conflict that I see in the structure of this bill depends on folks in the industry being able to meaningfully identify new customers. And if they are simultaneously required to only collect data necessary to reasonably verify the customer's identity, I mean, some companies may feel comfortable with that. Others may feel that they're at risk of being investigated by the Attorney General's office for collecting too much data and attempting to do a better job of age verifying folks that are applying to the machine. So data minimization is important. I wonder if that's a concern, which it should be a concern for anybody engaged in trade or commerce, if there's a better way to articulate this. Because as it reads, any company that collects more than they reasonably need and doesn't really define what reasonably necessary is at risk of being sued and investigated by the Attorney General's office. That incentivizes them to do not as good of a job of age verifying as they may otherwise do. So I think there's a tension there that should be thought through and addressed.
Would you mind thinking up that phrase or that sentence so that we could drop it in there?
Do you want to tie it to 507?
You want to think of some way how to handle that problem for me?
Yes, I can do that.
Would you want to tie it to 507H in the text of the bill? Is that what you mean?
It would be where that data privacy section is written.
Yeah.
I believe there are data minimization requirements of 507H. I'm not sure how many of these machines would meet you have to process the information of 35,000 unique New Hampshire citizens in order to qualify for 507H.
Oh, I see.
I'm not sure, especially the
threshold's
smaller
higher.
companies that only have a couple of machines, they probably don't
No,
meet that
They are
threshold.
never going to meet that.
So I don't know if it's as simple as saying, 507H shall apply. But maybe it is, there's a
You could
policy
say
that
with
says,
with a little lower amount. Yeah.
let me look at 507H and is this on for hearing on Tuesday?
So we will be doing this same that time, Tuesday morning.
10 o'clock Tuesday. Who should I send proposed language to?
You have his email?
Yes, ma'am.
Yes, I do.
Yeah,
Yeah.
thank you.
Will
Appreciate
do.
it.
He is the guru.
I'm happy to do that.
All right. He's the one in charge. All right.
Thank you for hearing my
I just have a question for you, if I may.
So be quick because we still want to
I
wrap up
think I'm
doggies.
always quick,
We
right?
want to do dogs.
I'm always quick.
Okay.
My question is, as a AG, can I get the data for each machine? How many frauds are there and how many legitimate transactions for 2025? Because I like to basically understand that.
Can you or can we? I don't
Can
understand.
you guys?
I mean, if we have reason to believe that laws are being violated, we can force companies to do that. I would note, just to clarify for the record, that yesterday there was an Iowa, it was characterized as a study here today. It was not a study. It was an Attorney General investigation where subpoenas were issued to all of the companies and every single transaction was reviewed and consumers were actually called by investigators to determine whether they were fraudulent or not. And that's where that 95% fraudulent number came from. It was not a study. It was
Right, that was not a
actually
study. That was an
subpoenas
actual-
that were issued by the Attorney General's office in Iowa to these various companies and a review of all of the transactions to determine which ones were fraudulent. So Iowa is
can I-
not New Hampshire.
Yeah.
We have not issued those subpoenas. We have not reviewed those complaints. So I can't simply say what happens in Iowa is the same as what happens in New Hampshire, but I do think it's reasonable to suggest that, if it's 95% in Iowa, it's probably not 2% in New Hampshire.
But on that study, though, it depended on.
It's not a study, it's an
Oh, study,
investigation.
okay. The investigation.
That was a,
It's, my understanding, it depended on the phone calls to the people to see if they were fraudulently, and that could be skewed by who answers the phone and who tells information to a stranger that claims to be the Attorney General's office, right? So the methodology is kind of not
Nothing is
bulletproof,
perfect.
right? Yeah.
Certainly. But
so how much money did they spend on doing those phone calls and that research? I mean, did the Iowa Attorney General's office spend some money on that?
well, I mean, it was staff time, so yes. I mean, You know,
Yeah.
it
Well,
was a
maybe
consumer
we-
protection investigation.
So how many complaints have we gotten?
How many complaints have we
Yeah,
gotten?
we
These
got-
don't typically take the form of consumer
Okay.
complaints. We
So
get
you don't
calls
you
and
don't
we get
fraud calls.
BAAS referrals frequently. The problem with our data is not good for answering this kind of question because we have a volunteer hotline. If somebody calls the hotline and they say, hey, I'm involved in a crypto scam or I was involved in a crypto scam, we're not then following up and saying, all right, was it through did you do it on the
Your
computer or did
machine
you do
or-
it through a
Right,
kiosk?
exactly.
Sometimes that comes up organically, but we
Right.
don't, that's not the purpose of those calls. The purpose of
Okay.
those calls is to try to help people get their money back.
Okay.
So we have a lot of them that were associated with kiosks. We have a lot of them that were not associated with kiosks, and a lot of them where it wasn't specified. So yes, there are not formal complaints, but yes, there are a lot of
So
calls.
the,
And
the phone number that people could get on the machine for complaints,
Yeah, it's,
who's it go to?
it goes to, hold on one second. Page 2, section 3 there, is what you're asking about.
Yeah. Who gets who's getting,
Oh,
who's
wait a
picking
second,
up the
hold on.
phone?
So there's two levels of communication. That one is between law enforcement and the kiosk operator. And then I don't have it popping out in front of me. There's another section that the user gets a phone number to law enforcement. It's not popping
Can I
out.
get
in me.
your
Okay. So anyways, the reason I say that
receipt,
is
on the receipt.
to address this concern
Yeah.
by Representative Salvi, to address his concern that after we pass this legislation, I would certainly want to make sure that everyone who has ever felt that they got
Yeah.
scammed,
Right.
that we collect that information and make sure we follow up. So in other words, we'll find out if there's a disproportionate number or how many numbers so maybe next year we can ban the machines if we find out that it really is 98% or 92% or whatever.
I
it
would
is.
like to know whether we have a data or not. If we don't have a data, somebody has to tell me we don't have a data.
Right.
And where I need to find that.
We don't have the data.
So I can answer that question very directly. We do not have that data. The only people that have that data are the companies themselves. The Attorney General's office can ask for that data, either voluntarily or try to compel that data if we open an investigation and issue a subpoena requiring it. That has not been done as of
I will send you an email that I'm looking for the data.
Right.
Because I can't.
So
but I
here's
just-
here's what I'm suggesting, Representative Holly.
Huh?
I am saying to you that we would maybe want to add into this bill a system where we can collect the data, so that next year we'll have the data, and then we can make a decision whether we should just ban them altogether.
Well, so the state has to collect the data. So
So
what?
we
what
got
would-
to get the state to collect the data.
Yeah, what
In
would-
other words, I know you would love to have that
Yeah.
data right now and then be able to use that excuse on the House floor to kill this bill. But all I'm saying is, let's pass this bill, but let's put in this bill a data collection system so that next year, after we've got a year under our belt with these machines and how this new law is implemented, to find out how much scandals are going on.
Okay, may I ask a question? My question is, do not laugh, please. My question is, in 1 year, if millions of dollars get lost
Yes.
from elderly people,
Yes.
who is responsible?
The scammers are responsible. They're the criminals.
Who is because we are basically extending that for 1 more year
Right.
without even getting data right now, which may not be difficult.
So if you're
no,
looking for, if you're looking for data, excuse me, page 4, that receipt section is pretty much all the data points I think you
I'm
would,
looking for New Hampshire
other than
data,
whether
please.
whether the transaction was fraudulent, because you don't know at that point, right? You don't know.
Right, well, we'll figure that
could-
out.
we could do
But
that.
that is my commitment to you, is that we will at least collect this data so that we know going forward.
May I add a cautionary comment there? To the extent what you're envisioning is issuing some sort of directive that anybody who's been a victim of a scam needs to report it to the Attorney General's office in the next
Oh,
year.
I haven't said it was you, because it could be law enforcement. We just started that. We have to figure out who should be collecting it. Yes.
Well, to the extent you plan for it to be us, without significant additional resources, we
Yes.
cannot handle an increase of 5,000 complaints in the next year. We cannot do that.
You really think it'll be that many?
I really think it would be much more than that.
Okay. At the top of my head, I think the department that it's best to be able to collect those complaints is securities.
I'm sure they would have a similar reaction.
Well, no, they
Can't
have
speak for
lots of
them,
money.
but-
They have lots of money. They have fraud money. They have fraud money to use for this.
But
Evident-
your question is who has the data? The industry has the data. You could ask them for it.
The only way you can get it from them is we have to license them.
Ask them for it voluntarily.
Well, we know about John Hunt's rule of licensure, don't we now? Okay, thank you very much, Brandon.
Thank you.
Okay,
I'll be in.
So I just have one last comment on that.
yes. No,
One
he's
second.
I've already recognized him to speak. Okay, we can talk offline on that. Yes. Rip.
So back in the old days, because I've been around a while, this was the Wild West, right? There was no verification. I used a prototype in 2013. It had none of this stuff. It was just put the cash in, show your QR code, push a button, and you got it, right? Nowadays, there's all kinds of new tools for tracking the flow of funds, customer's identity, and there's new tools all the time coming out. So the good actors in the space are trying to adapt with those new tools to prevent the fraud. They don't want the fraud either. It doesn't mean that every actor in the space is a good actor, right? There could be, someone could take the machine that I used in 2013, put it at a convenience store, and there's none of that verification. It would probably be illegal according to federal laws, right? So someone could do that, scam someone, and that shouldn't reflect on the segment of the industry that's trying to do the right thing. I just want to make that point.
I absolutely am saying to you, I want to pass this bill, and then this system that I'm suggesting for fraud is going to be based on our new law. In other words, he thinks there's 5,000 people. You think that there'll be 5.
I didn't say that.
No, I didn't say. I'm saying that
But-
you're saying that because of
but-
the verification system in this bill, you think there'll be a minimal number.
It's a baseline for any operator in the state to have to operate by.
That's
right?
exactly.
yeah.
Okay? All right. Dogs. So we're running low on time, so all I want is anybody have anything they've seen so far that they're very worried about? Otherwise, we'll see you all on next Tuesday.
Okay.
Speak now or bark first, or this would be ought to pass as amended, yeah. We do, we have hearings. Hearings on other bills. Yeah. Okay, we're all set with dogs? Oh, you want to, okay, sure, come on up. Justin. So, just so you know, Justin, this is not a public hearing. This is a subcommittee. So that's why you don't have to bother filling out cards. Okay.
Oh.
So if you just want to briefly talk about what you see
That
here.
would be great.
And if there's something different from what you had sent me or some issues, then just call me. Call me tomorrow, Friday.
Okay.
Okay?
I can resign.
And I will fix it.
Okay.
There was one time where they said shall, where
New Hampshire?
we said should be, and she
Looking for the
couldn't
New
handle
Hampshire.
should be. Should about the training.
Okay.
She didn't like the should be training.
Okay.
So we have to figure out, but I was going to say, what I was thinking is, it's shall or similar. Similar.
Yep.
I was going to add the word similar to that.
Perfect. Is this on? This is on. Okay.
Okay.
I just thank you. I just wanted to say thank you to the committee for how far we've come.
Okay. You're very welcome. Okay. All right. We are done till 1:15, right? What time is it now? Is he done? 1:10. Okay. Let's say, yeah. Okay, 1:15.
We're meeting at 1:15, right?
Guys, I'm super. Thank you.
For that. All right. You're going to introduce these bills for us today? So we'll open up the public hearing on Senate Bill 440. Is that the first one? 444.
Thank you very much, Mr. Chairman and members of the committee. For the record, my name is Representative James Tebow, and I'm here on behalf of Senator Innes for all four bills today. Unfortunately, he is teaching the class at UNH right now, so he couldn't join us here. So I'm just going to say it right now. I have a prepared statement from him for each of these bills, which I'm going to read. Because they're not my bills, I won't be taking any questions, but I'm sure the interested parties in the back will be happy to take anything you have for them. I'm here to introduce first Senate Bill 444, prohibiting the use of animal testing when other comparable methods are available. This legislation is critically important to protect animals, many of whom unnecessarily suffer and die, to assess the safety of products like cosmetics, household cleaners, pesticides, and industrial chemicals. As technology continues to develop, alternative testing methods are becoming more efficient and cost-effective. It is important to emphasize this legislation requires companies to use alternative test methods only when they are available. It would not prohibit animal testing conducted for the purposes of biomedical or university research, nor would it prohibit the use of animal testing to comply with state or federal agency requirements. And with that, that is Senator Innes' statement. So I will defer to the experts who might be here to testify on this bill. Thank you.
Sorry, I didn't know I turned my mic off. You're the expert.
Thank you. Is this working? All right. I am Kurt Ehrenberg. I'm the New Hampshire State Director of Humane World for Animals, formerly Humane Society of the United States. Good afternoon, Chairman Hunt and members of the committee. This bill requires testing facilities to use non-animal testing methods whenever they are available and scientifically reliable, covering products such as household cleaners, cosmetics, drugs, pesticides, and industrial chemicals. It also requires reporting on both traditional animal tests and alternatives. The bill does not prohibit animal testing when required by state or federal regulations, and it does not apply to any research done at our universities. Non-animal test methods are not only more humane, but more accurate. Many traditional animal tests were developed decades ago and often fail to predict human outcomes. Over 90% of human drugs fail in clinical trials despite extensive animal testing. Modern approaches such as organs on chips, artificial human tissues, and sophisticated computer models can better mimic human biology, and they continue to improve. Animal testing is also cruel. Dogs, rabbits, non-human primates, monkeys, right? Mice and rats can be forced to ingest or inhale substances, have chemicals dripped into their eyes, or endure chemicals on their skin. They may suffer for months or years before being killed. Fortunately, alternative tests can provide better information without harming animals. SB 444 does not prohibit all animal testing. It is common sense legislation that simply prevents New Hampshire facilities from conducting testing that is completely unnecessary because other methods have been accepted by regulatory agencies. It will align New Hampshire with other states already requiring the use of alternatives, including Virginia, New Jersey, New York, and California. And SB 444 also aligns New Hampshire with the recent actions of the federal government, which has expressed a keen interest in moving away from outdated animal tests. While federal agencies may approve new testing methods, there is currently no mandate ensuring that facilities adopt them promptly. As a result, unnecessary animal tests may continue to be used even when more effective human-relevant alternatives are available. A state-level requirement will help close this gap by ensuring that once non-animal methods are validated by federal agencies, facilities are required to use them, driving innovation, improving public health outcomes, and reducing animal suffering. We currently have very little publicity, publicly available information about animal testing happening in New Hampshire. New Hampshire only has a few USDA registered research facilities that reported animal use in 2024. Two of these are the University of New Hampshire and Dartmouth College, which have been exempted out of Senate Bill 444. We have been unable to ascertain if there are facilities in the state that would be directly impacted by the provisions of this bill. Some examples of those facilities could be contract laboratories that conduct animal tests for chemicals, drugs, or other products that are headquartered outside of the state and therefore report their animal use in another state, or those that are not using species covered by the Federal Animal Welfare Act. Our limitations in knowing which facilities in the state are conducting this type of animal testing is exactly why it is necessary to require reporting on animal use as a provision of this legislation. However, passage of SB 444 will also safeguard New Hampshire for the future, making it a destination for investment by the superior technologies that will replace animal testing. Passing Senate Bill 444 would ensure that New Hampshire adopts the best available science, protects animals from unnecessary suffering, and attracts investment in the biotech industry. Humane World for Animals strongly urges the committee to suggest ought to pass on Senate Bill 444. Thank you.
Representative Sullivan.
Thank you for coming in and talking to us. So I have a few questions. I mean, would you believe I actually agree that we should do whatever we can to reduce suffering in the world, regardless of humans or animals. What is the reason why people would continue doing it if they're actually better? Because you said multiple times, better ways to do it without animals being involved. What's the reason why they wouldn't do it? Just like status quo, inertia, or cost?
Any of those things, but certainly cost would be a barrier, I suppose. I don't know what motivates people to torture animals unnecessarily, so I really can't speak directly to that. But the point is, if it's going on in New Hampshire, we need to know about it so we can stop it. So this bill does, for the first time, require reporting.
Okay. Thank you.
Representative Walsh.
Thank you, Mr. Chairman, and thank you for your testimony. I know you're exempting, or the author is exempting universities. What kind of testing, just on a basic question, what kind of testing on animals do universities do? And why?
They do tests for medical research for the most part, I believe, but I think there is a representative here. If you want to delve further into it, I don't know if she's planning on testifying, but
Okay.
it is something that has been an issue in the past.
All right, okay, thank you.
So just a reminder, we've had this bill before. And and we got down to the wire, and then it was, I think it was Dartmouth or something that they might hand over Lebanon. Was that who it was? And that there was some saying that they were concerned and they wanted to be exempt. So for me personally, I don't know how you guys all feel, but for me personally, as soon as people start wanting to be exempt, that my antenna goes up and says, so that means they really are testing, or they're doing something that might be considered testing. And so therefore, why do they want to be exempt? When we don't even know if there's anybody in the States that's actually doing it. So it's much like red dye 40 or pornography. This is just one of those laws we're putting on the books. And yes, when people say how all these other wonderful states just think these are great legislation, well, it's because they don't live in the live free or die state. They live in the we'll regulate and government is a good thing. And so we're passing this bill. The Senate passed it, send it over to us, and it's just a matter of whether we just want to add a little more clutter to our statutes that bars something that we don't even know exists at all. But it feels good. Doesn't it feel good?
Mr. Chair, isn't the point of this bill though is to help figure out whether or not, like, get a survey of who is doing that, right? Isn't that what
Well,
this
that
bill
would be
does?
good, but we're looking at the enforcement, and there is no enforcement. There's a whole area of, it is very close to the Attorney General's office, so yes, so the Attorney General could prosecute you. But it's certainly not on the Consumer Protection Act. They would prosecute you, and who knows what the penalties would be if you did do it. Do you know the penalties?
So what this bill does do is it requires reporting. We've never had that before. So last time this bill came up, it's like, well, if we don't know, why would we try to stop something we don't know is happening? Well, let's find out and let's have it reported. But let's also say that if there's a test that can provide the information needed without causing suffering to an animal unnecessarily, we'll do that too. It's very simple. And it's not a nanny state bill, and it doesn't fit that category.
I do think that's an important part, Mr. Chair.
What's that?
Like, just, it's on page 2, section 2, I guess. I mean, that does sound like a difference from the bill we dealt with last, I think, my first session, where I do remember the Dartmouth thing happening. But if for the first time we have an ability to require companies or organizations to publish what they're doing with respect to animal testing, that seems like that might be useful information if we're going to regulate this in the
Okay,
future.
so I'm now looking at Roman numeral 1.
Yeah, so down
Okay,
below that.
so Roman numeral 1 says we're not banning. Is that correct? No testing facility in the state.
I'm
shall
talking
use-
Roman numeral 2.
It's on
No,
page
see, that's what I'm
2.
saying. Your 2 comes after 1.
It's on
Okay,
page
so
2. number
1
2.
is the statute, and 2 says they're supposed to report. Now, theoretically, I don't know any criminal who's actually wants to, will comply with reporting something if they're doing something illegal. So let's start with Roman
That's what
numeral
you're saying,
1.
move that first.
You say number 1, show me, I have to admit, I haven't read the bill, so let's all read it together.
Well, yeah, no,
Okay,
that's what I was
so
saying.
where does it say in there that any testing facility, no testing they shall use a traditional animal test method in the state if an agency responsible for regulating the specific product or activity for which the test method is being used has either approved an alternative test method or strategy, made available or granted a waiver to use this test, where there's no alternative method.
So it sounds like you wish 2 were before number 1. It sounds like the ordering bothers you.
Well,
The reporting goes first?
I dare to go to say, well, let's get rid of 1, just start with 2. Two
Okay,
is
that's
that
what I'm saying.
anybody who's actually testing
Should be
shall
reporting,
should
and
be
then we can
reporting it.
evaluate whether or not.
And then
certain things are-
we can decide whether
are
how
alternatives.
we are offended by it or
And,
not.
and we assume that someone is going to say, yes, I'm using these horrible methods to test.
Well, I don't,
on
I
my-"
think,
And here's the report, Governor.
no, but I think that's, no. I think, because I think there's a difference between a company who has a facility that's doing research and they're using animals in the process, and they just have to report, yes, we have animals in our laboratory and here's what we're doing. I don't think they're going to frame it as being bad or good. It's just the process they have. And then through that process, we'll have a record of the number of companies or institutions that are doing that. And then we can say, all right, well, it turns out the process you're doing in your facility could be done another way, and we can evaluate that there. 'Cause
Yeah.
whom is going to do that
Okay, well, let's follow
Well, I
the
mean,
logic.
these are
Let's
important
follow
factors,
the logic of these two paragraphs.
Mhm.
Okay, so the logic of the second paragraph is anybody who is doing testing shall report to the Governor's Commission on Human Treatment of Animals regarding treatment in a method told. Such report shall include the number and all the goodies. Okay. Paragraph 1 says that nobody should do it in a traditional method in the state without approval from some agency.
I agree. It
And
seems
the
like
only agency that I can see that's being talk about it is the Commission on Human Treatment of Animals. So are we saying that the human that
No,
this
approved
commission
by federal agencies.
or could be a federal agency?
That's what it is.
Where's the word federal? Okay, so on page 2,
Page 2.
on page 2, 1A, 1 and then you A, B, C, A down to F. So 1 is that if they're going to be doing the testing, testing if it's an agency. Now, who agency is that defined in here? No. Okay, so we're assuming agency means Food and Drug Administration or some federal agency,
State or federal.
or federal agency has approved the testing to go forward.
Yeah, so I understand. I think what you're saying, and I'm not disagreeing. I just want to
Yeah.
reiterate what I think you're saying is you're concerned or maybe bothered by it's almost like we're banning something without knowing the information first.
Right.
And I'm saying at the very least, we should know what this information is. Like this seems like the first bill we've had that tries to understand what's happening in our state, which currently right now nobody seems to know. And that to me doesn't seem like a bad.
I absolutely agree that I have no problems with that. They require that anybody who's doing animal testing should be reporting it, so we all know.
And then we
So
can
that way,
evaluate.
we, at least going forward, we know.
And then because this bill has come up in my 2 terms here already.
Yes, exactly.
And
We've been
don't-
here before.
And we don't even know what's going on at Dartmouth, and Dartmouth raised questions, which means they're doing something, right?
Or they're thinking of doing something.
Yeah,
or-
right.
Or they might be keeping the options open of going for a federal grant before Trump cuts off their funding.
So I do have a question about that. So besides the research institutes, what facilities in New Hampshire, if you know, does this type of animal testing?
Okay, so this is
Like
like a chicken egg kind of problem. So
But-
last time, I'm sorry.
You know, if you know.
We don't know. This bill says if you are testing on animals, you have to report it. That's what it says.
Well,
So-
when you start
but-
something, say no testing, that doesn't look that way.
But when you say, last time it was it's a chicken egg, we don't know, so we don't need to prohibit it. If we prohibit it, we're prohibiting something we don't know about.
No, I just
So
have
you
a
can go
question.
around in a
No, I have a
circle.
question about the process. I'm not disagreeing at all. I'm just
Okay.
trying to figure out how we get to this data. So it is a little confusing about, the quote agency. It's a little confusing to me because I don't know that much about it. What testing facilities would we be targeting? And then how we would tell these people, now you have to report. I'm not sure who we
Well,
would
let's
send
say
this
a
out.
business that, New Hampshire, we always are recruiting businesses to come here. Let's say we're recruiting businesses. Don't we want on the books when they do their due diligence, if New Hampshire's a good place to come, if they do animal testing, that they realize that it's illegal and they can't come? Don't we want that on the books here?
I'm not disagreeing.
I
but
mean, who
banning
here is in favor
So
of
you are
testing
banning it.
unnecessarily on animals? Raise your hand.
Unnecessary.
That's what this bill is all about. If there's a test that does the same thing without harming animals, you use it. Simple as that.
But this is a process question. So there are companies in New Hampshire that we think are doing maybe animal testing that we don't really, another method could help.
There-
So we're going to send this notice out to somebody to say, now you have to report on your animal testing. So who are we sending it out to?
Well, so
How are
let's
we
say there's a
collecting the data?
corporation in
And
Portsmouth,
what
the
agency-
Lonza,
excuse me, what
oh, I'm sorry.
agency is going to evaluate the information. And it's very interesting. I was going to say, Lonza, I don't know, do they do that type
We
of
don't
testing?
know.
So would I send this request for a report out to all scientific
I would,
companies?
I would assume, it's the law of the state. Lonza is a responsible citizen in the state, corporate citizen. They will comply by the laws of the state. Simple
Perfect.
as
So
that.
How do we, how?
The
who
first thing is they report it if they're doing it.
Right.
I
So
agree. Who is going to be sending the letter to Lonza to say, please report, according to this, please report and send it back to us? Who is sending out that notice or that letter? And then how do we figure out who to send the
There's
letter
nothing,
out
there's
so we could
nothing in
collect
this
the
bill
data?
about sending out any notice.
Then we're not going to collect any data. We're not going to be able to. I don't know how we would do that.
okay, I think you have really articulated where my problem is. And I'll just for discussion purposes, I'd say if we just remove Roman numeral 1 and just make this bill Roman numeral 2, then I have no problems with it, because then that way we're finding out who's actually testing out there. Representative Burrows.
Is there, and you might know this, is there any way of getting data from federal agencies which oversee this?
Good luck.
Oh.
They're the ones that are trying to get data out of us. They want our voting records, and they.
For the animals,
I-
I would just say for the animals that get tested unnecessarily, which does happen in the world. We don't know if it's happening in New Hampshire. We're trying to find out. But let's think about the downside to the future of animal testing. I mean, this is a really good place and time for you people to take a stand against animal cruelty. There's no downside.
No, the downside, and I know this is hard for you to wrap your arms around. The downside is that there's some of us in the legislature who don't want to pass feel-good legislation that just sits on the books, so we can all go around and say, hey, we did something, we care about this issue, when it was meaningless because we don't even know if there's any testing going on in the state at all. And so that's why I'm saying, let's just go with Roman numeral 2.
Well, could I
and
just address that
let's
again?
find
It's
out how
meaningless.
much testing is going on out there.
If it's meaningless, you don't, because you don't know and you don't want to
That's your
find
chicken,
out.
that's your chicken and the egg.
Right.
That's your chicken and the egg. Yes, Representative.
Yeah, thank you. Just listening to the conversation, what if we limit it to Roman numeral 2,
Yes,
section 2,
yes.
and put a sunset of 2 or 3 years? And that
Yeah.
way, we don't have to pass other legislation to remove unnecessary legislation.
Yeah.
Just an idea.
I agree. Representative Burrows is next.
Just before I do that, are you looking at section 2, page 3?
So again, you're looking online, so I have no idea how it
Okay.
sorts it online. But
okay.
on this, so, because I always like to refer, so this bill only is 1 and 2 is the effective date. So there's only one section of this bill.
Okay, okay.
So I'm looking at the RSA that starts with Roman numeral 2 versus Roman numeral 1. And I can tell you which one you can see with 1, because it's not the definitions. It's after definitions, animal testing prohibition, and he uses the word prohibition, using under certain conditions and circumstances. And then starts out with 1, which is the limitations. Okay? And I'm just saying that's the cart before the horse, because we don't even know if there's any testing going on in New Hampshire at all. So if we just pass 2, we will know what we're regulating when we then come back, and then we can do 1 with knowledge.
Okay, if just an idea, I mean, obviously, it sounds like we don't have the data, the information that we need, and I'm thinking that maybe there are animal welfare groups, veterinarian groups and whatnot that could gather information because it's important. They might be willing to do that.
Right, well, evidently, we have a commission on human treatment of animals.
The Governor's Commission on the
It's a
Humane
governor's
Treatment of
commission.
Animals.
So we already have the entity to.
Do they do anything?
Yeah,
I'm being
I'm
serious.
on that commission.
Do they do anything? I'm not being, I'm not being.
Oh, yeah, absolutely.
But you're on that commission and you've not heard that there was anybody testing in New Hampshire, right?
There's no way to gather that information, which is why we don't know about it.
That's why we need to pass this law.
But the other point of this bill is, if we believe unnecessary cruelty to animals is wrong, then you have to pass this bill.
Okay, fair enough. Thank you very much for your testimony. Anybody questions for him? Because I think we're like in a subcommittee mode here right now. Okay, so we're all set. Thank you very much.
Can I make a point or no?
Oh, you want to say something to him? He's testifying.
Oh,
This
yeah,
is it.
sure.
This morning we were in a subcommittee mode. Today we're in hearing mode, which we're only supposed to be
Okay.
asking questions
It's
to
a-
the people.
all
So
right.
if you're all done with
Is it
him,
a would you believe?
you
So is
can
that
do
no?
a would you believe, yes.
Okay, thank you, Mr. Chair. So, would you believe that personally, I think, and probably almost everyone here feels that, you know, we have a bad feeling for animal testing. Ooh, that's bad. So why would we turn a blind eye and say, oh, no, we don't know if it's happening here, so we're not going to pass a law against it? You could also say, oh, we don't know if child pornography is happening here, so let's not have a law against it, right? So why not have a law on the books that says, hey, you know, you shouldn't be doing animal testing if there's other methods that you can still find the same alternatives, answers without doing animal testing.
Well said.
Thank you.
Yeah, thank you.
Right. So that would be just moving section 1 to be after section 2 of the bill.
Excuse me, may I speak? I don't see why we would obliterate that. I think it still needs to be there. You were saying, let's get rid of it. I don't think we should get rid of the legality of making it illegal to.
Pass it even though we don't know, and we don't, as far as we know, that this law will never, no one will ever use the law, but we've got it on the books just in case.
Just in case, yeah.
Just
Well,
in
like,
case.
again, like
Just in
child
case.
pornography. Are we
Okay.
certain that there's child pornography that's taking place?
So I don't
here?
want to pass that bill either, so.
Well, see,
It's not a
well,
good
then-
example.
I think it is a good example.
Right.
It's just.
But I don't
as-
want, I think all of this is just cluttering our statutes. I mean, to me, I want laws that you know, less government is better government. And we pass laws what we know
And-
is really a problem that we got to fix.
I'm
We
with
don't
you.
just, you know, oh boy, someone says, isn't it terrible that they test animals? And then this puts something on the books when the state of New Hampshire, we don't even know that there's a problem. What his articulate was that we want to make sure those companies don't think about coming to New Hampshire. We don't want them to move here.
Right.
And that's the benefit of this
Exactly.
And
legislation.
under your plan, they'll be able to come.
That's true.
And
And,
just-
and then they'll have to report and tell us what they're doing.
But animals suffer.
We don't know that they'll suffer. They might be compliant. They might be able to comply with all your stuff in there, but they'll have to report it and tell us that they're doing it.
But to say that, but the state of New Hampshire saying, we oppose and will not tolerate unnecessary cruelty to animals is not cluttering up our statutes it's not an unnecessary statute because it protects animals from cruelty.
That's fine, Kurt. That's your opinion. but
Thank you.
I appreciate your opinion.
And I appreciate your listening to me very much.
I agree with Kurt.
Could I make one comment?
Except there's an exemption for universities. They can do whatever they want.
Thank you, Mr. Chairman. We already have statutes on the books outlawing cruelty to animals, correct? This is just an extension of that. And another way to look at it. So I don't know how anybody in the world would not want to pass this bill. I don't understand that.
No, we're not. This is not a subcommittee. This is a hearing. Okay. Is there anybody else who would like to testify on Senate Bill 444? Seeing none, we'll close the public hearing on Senate Bill 444. And Yes, I do have two trained, well-trained lads. Again, I don't know there's any testing going on in this state. It just, this is just, feel good. Okay. What's up next? What's the next? 487. No. What do I have for it? Okay. All right, James, you're up. Senate Bill 487.
Thank you, Mr. Chairman, members of the committee. Once again, for the record, my name is James Tebow. I'm the state representative for Franklin and Northfield. I'm here on behalf of Senator Innes to introduce Senate Bill 487. This is relative to allowing credit union members to pay members of the board of directors for their services as a board member. It was introduced at the request of the Cooperative Credit Union Association and of several other New Hampshire credit unions. If passed, New Hampshire would join 16 other states that allow the membership of state chartered credit unions to vote to allow compensation of their board members. The job of a credit union board member continues to require more work and higher levels of expertise required to ensure compliance and good governance. Compensating board members for their time and expertise has been proven to attract quality candidates to join those boards. This bill is only enabling legislation. Nothing would force a credit union to compensate their board members if they don't vote to choose to do so. I imagine there are people here to speak on this bill from the credit union field, so I will leave any questions to them. Thank you very much.
Okay. Chair will call on Amelia Ghilardi from the Bank Commissioner.
Good afternoon. For the record, my name is Amelia Galdieri, and I'm the Bank Commissioner for the state of New Hampshire. Thank you for the opportunity to provide testimony on SB 487. As mentioned previously, the bill was drafted at the request of the Credit Union Association, not at the request of the Banking Department, and the Banking Department is neutral with regard to the underlying policy of this. I'm really just here to provide you with some high-level information and answer any questions you might have, so happy to do that. Approximately 20 other states permit credit union board member compensation in different ways. Like if you go and look at the bills, they're all slightly different, but basically 20 other states allow this to happen. Federally chartered credit unions are permitted to compensate only one board member. So that's another option out there. So this bill, as drafted, brings us more in line with those other states that permit some form of compensation. Perhaps it gives New Hampshire chartered credit unions a slight competitive advantage in recruiting board members. And I think there's folks here who are going to probably talk to you more about that. So it might make a New Hampshire charter for a credit union slightly more appealing than perhaps another state or a federal charter. So I think, but it remains to be seen whether that will be an effect of this. But those are kind of the issues as I see them, and I'm happy to answer any questions.
Okay, Representative Spear.
This may be your question for you. This bill, we've had this bill before. Do you know what happened to it?
Yeah, it got lost in the shuffle on the Senate side.
That's all?
What do you mean? How did that happen?
We have to ask a senator. We have one in the room now, right? I'm not sure she'll remember. It just.
I believe it got stuff attached to it, right?
That's right.
I can't quite.
That's right.
There was a lot
there
of.
was some non-germane amendment that was added to it that was offended.
Perhaps.
Which
See, he
one was it?
remembers.
Oh, okay.
I think that's right.
So.
Oh, gosh.
Okay.
I show up no matter what.
I'll play the devil's advocate here.
Okay.
As some of us know, credit unions are considered nonprofits.
Yes.
They don't pay taxes, or what is it they not pay as nonprofits?
I'm not a tax expert, so I don't regulate that part of
Right.
it. So I
But they do pay banking fees,
yeah, oh,
Right.
they get examined by us and regulated by us, just like
and you
everyone
assess
else.
them equally. So the only nonprofit status theoretically would be federal. Federal? Is that- Yeah, okay. So the only reason, so I'm asking the question that theoretically, in New Hampshire, if you sit on a board of a nonprofit, you're not supposed to be compensated. So but I guess given that the federal, but you don't even do that because you don't regulate the federal credit
I don't.
unions.
And I
So
also don't know if that's the case. I don't know if I don't know if
if
nonprofits are
nonprofits,
forbidden
it's
from
supposed to-
compensate. I don't know
compensation.
who would,
But-
it would be like maybe the Secretary of State would enforce that. I'm not sure
Right.
who would even
Well, the
enforce
charitable
that.
trust. Charitable
Oh,
trust division
perhaps.
on
Yeah.
their 990, you're supposed to report.
Perhaps.
I know you're supposed to report income, but I think board members do get incomes.
Yeah.
To some board members, but so
Oh, for sure.
theoretically,
For
the
sure, other
reason
boards,
why
yes.
this legislation's here then was that historically credit unions were proud of their nonprofit status, and they they had their board members were not getting compensation.
Is that
Would
a
you
question
believe?
for me? Would I believe?
Would I believe?
I don't know. I wasn't around then, so
Right.
I don't know.
You have no idea why they
I
didn't have-
truly don't know. I can tell
Okay.
you what our law currently says, and I can tell
Yeah,
you
so
what other states
what
do.
is the call law
I think
currently?
it's neutral. I'd have to go and see. I don't know if it's forbidden actively. I'd have to go research, take a quick look. I don't want to tell you the wrong thing. I'm happy to come back to you with
Right.
that information. So
Okay, fair enough. All right, Representative.
Thank you,
Meckler.
Mr. Chairman. Just to clarify things, I do not believe that credit unions are nonprofit. Nonprofit would imply 501c3. I think they're a not-for-profit, which is different. They're not a 501c3, they're something else, but they're not, so I think it's a different clarification.
I think there's a credit union president
Right,
sitting in the back of the room who could probably tell you
Yeah.
more details
Okay,
about
we
that.
got some credit union guys who'll come up. Okay, thank you very much.
Okay.
All right, so we have Ken and Adrian, and I could try doing your name, Census and Valzaguez. Nice to see you again. So you know what my question is. You got to hit the button.
Good afternoon. First of all, thank you very much. I want to start by conveying my gratitude because, as Rep. Spear was referring, the bill was passed in committee unanimously last session. So I thank you. I thank you for that. My name is Adrian Velasquez. I serve as the Chief Advocacy Officer for the Cooperative Credit Union Association. I'm here to testify in support of Senate Bill 487. This bill would allow state chartered credit unions in New Hampshire to compensate their board members. New Hampshire credit unions are more than financial institution. They are a lifeline for over 800,000 members here in New Hampshire and a cornerstone of our local economy with an impact exceeding 1.1 billion. But perhaps most important is their unwavering commitment to giving back. For decades, they have stood proudly beside Make-A-Wish New Hampshire, raising over $3.8 billion to bring hope, joy, and life-changing experiences to children facing critical illnesses. This legislation represents a vital step to align New Hampshire with 20 other states, including Connecticut and Rhode Island in our region, that recognizes the increasing responsibilities and expertise required of credit union board members. Board compensation will ultimately benefit credit union members through enhanced governance performance. It is important to emphasize that this legislation is purely enabling. It does not mandate compensation for board members, but instead empower credit unions membership to decide for themselves. It is optional. This approach respects the cooperative structure of credit unions, ensuring decisions are made democratically and in the best interest of members.
While both state charters and federally chartered credit unions share the goal of serving their members, there are distinctions in compensation structure. Federally chartered credit union can compensate a single board member, with other directors serving as uncompensated volunteers. In contrast, this legislation will enable New Hampshire state chartered credit unions to decide democratically whether to compensate their own board members. Credit union director compensation remain modest compared to fee paid to director of other financial institution. Providing fair compensation ensures that credit union can attract and retain talented leaders who can navigate the complexities of today's financial landscape in an increasingly competitive professional climate. In conclusion, I respectfully ask you for your consideration in support of this legislation to allow state chartered credit unions to compensate board members to strengthen their governance performance. I'm happy to answer any question. And if there is no question, I will leave you with Ken Sinas, President and CEO of St. Mary's Bank.
Any questions for Adrian before I start?
Well, we'll ask you.
Okay, perfect. Again, Ken Sinas. I am the president and CEO of St. Mary's Bank. I always like to, the oldest credit union in the U.S. Absolutely. We actually just celebrated the birthday of our charter, the first charter, yesterday. So it was kind of a big day. Yes, thank you. I'm here just to kind of talk a little bit about why it's important on board compensation. You know, it is getting more complicated by the day in the requirements of running a financial institution. As we get more complex on the cybersecurity side of things, asset liability management, and making sure, you know, the Fed rates are changing dramatically. To get the right qualified individuals in front of us, to hold us accountable, and to make sure that they're doing the right thing on a monthly basis and periodic basis, it's just so crucial to get the right talent around the table. I also look at it to say we are asking more and more of our directors. You know, ourselves, I'll just give an example. We have branches from Manchester to Concord to the Seacoast, Nashua. So we like to get representation from our board of directors from the different regions that we're in, because we also are all about community, as Adrian had said. They're traveling in addition to the monthly board meetings, you know, sometimes their packet is 150 pages long of different documentation that they need to prepare themselves for. Each of them serve on multiple committees. We have Asset Liability Committee, IT Steering Committee, Credit Committee. So they have to be versed on consumer loans, commercial loans, residential loans, collection efforts. We talk about everything in these board meetings. And the more experienced our directors are, the better they can give oversight to the organization. So I'm in full support. I really believe it just ups the game in getting the right talent to commit to a credit union board. So thank you.
Okay, so you are a not-for-profit.
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 Correct.
Are you, but are you 501c3s?
Not 501c3.
It's classified as 501c14.
14. There
but
we
it's
go.
not.
All
But it's
right.
not C3 in
Not
the
a
context
C3.
of. It's
Right.
a non-for-profit.
Okay.
Correct.
So isn't it true that you've never had compensation because you were always holding out that the board members were there voluntarily? They were providing a service to their community.
You know, they were providing a volunteer service to the community, but the look of a credit union back then was a lot different than the look of a credit union right now. And the other thing, you know, it's like we hear the whole, well, you don't pay taxes a lot, and there's so many other things that are kind of tying our hands because of that side of it. Our commercial lending cap is reduced dramatically. We can't loan in a lot of cases commercial loans to some because once we hit a cap that we're allowed through the credit union laws, we can't. And the argument is, well, you don't pay taxes. There's a lot of situations where we hear that same piece of it on the tax side. So I don't know why it was originally built the way it was built. I just know when I look around the table right now, it's just important to get that right governance and the right individuals.
And you want to have the best. You want to have quality.
I want to get the
Yeah.
best.
And so some quality people are going to cost money. So, and given the time, it's not a job per se, right? The hours, they're not,
No.
they're, but they do have a lot of committee assignments and they get a bit. So you're sort of like us in the legislature, it's volunteer. We're for all. Okay.
Absolutely.
So, you did say it's democratic, so theoretically, that if you were to implement a compensation plan, then all the members would give you the opportunity to vote to whether they want to give you that compensation or not.
Correct. I want to step back a little bit on the notion that credit unions do not pay taxes. That is actually a very inaccurate description because the reality is that the credit unions do pay taxes, right? They pay payroll taxes, they pay property taxes, and those are taxes, right? If the comparison is that they pay other taxes, then we can actually engage on that conversation as well. But the reality is that between fees and taxes, credit unions still pay some of them. The other thing, to answer your question, this is a national trend. 20 states, our neighbor states, Rhode Island and Connecticut, provide for that compensation. And again, the compensation is not directed at people make a windfall, make a career out of being a board members. What we're trying is to attract talent to face the realities, the difficulties, the fraud that and the cybersecurity that our members face. This would allow us to bring new talent, but ultimately the spirit is volunteer, very same as the New Hampshire legislature, right? If you think about it, it's a volunteer body that you're not making a salary out of your public service. Similar, our effort here is to compensate for things that would allow our governance to meet the demand that we're required by our regulators in terms of safety and soundness.
Fair enough. Thank you. Do you have
Comment?
any questions, Representative Salvi?
Thank you. So are these, how many hours in a week they are going to work, like a part-time hours or?
No, I mean they're not working. They're volunteers, and the compensation is based upon the time that they are spending on the board meetings. Ken, what is the average board meeting a month?
Yeah, the average board meeting is around 2 hours, and I'd say there's probably at least another couple hours worth of preparatory work. Everyone that's on one or two committees, that's another hour and a half to 2 hours per month for the committees, plus another hour or so of preparatory for those committee meetings. So it adds up on a week-to-week basis.
Okay, that's not very many hours.
Comment? But there's also, there's a lot of things to take into consideration here. We also have to, regulatory-wise, prove that we're giving a proper training to each of our directors, so they're knowledgeable of a lot of these topics. So they're sitting in on trainings, and we take them to industry events, so they're talking with other
Especially the
directors and
loan
they're meeting it. So believe it or not, the time does add up. No, it is not a full-time job, and we'd never say it was, but there is still a lot of time commitment.
Okay, Representative Herbert, then Representative Burrows, and then Representative Teresa.
I have a card of yours, and the fact of the matter is, I would be very supportive of putting a talent on the board that would bring in other forms of compensation. In other words, I don't want somebody that I've got my bank money in, wondering where they're going to get the money tomorrow. I want a competitive bank. And so as a result of that particular point of view, I'm very much in favor of your effort.
Thank you.
Would you believe? Okay.
Thank you. I guess this is somewhat of a, would you believe, and ties in with Representative Herbert said. Would you feel that these skilled people who come on your board are helping you make a better, more stable credit union?
Absolutely. I echo that.
Yep.
You know, we were lucky and on our board to get somebody who has a really good technology background. It helps. You know,
Yep.
it's like we have our own technology people, of course, and we use a lot of third parties. But to have that advocacy around the table, it gets the other directors talking.
Right.
And, you know, we really try to do a skills assessment when we're recruiting for new board members so we could cover those different topics. If we just wanted a rubber stamp, you know, board, it's a different story, but it does, having the right people around the table really sets the help strategy for your organization.
Quick follow-up.
Further question?
Yeah, and, oh God, I'm losing it because I'm 71. I know what I was going to ask. So do you think it would be difficult to get people of this caliber without paying them?
It would. It would be very difficult.
Yeah.
We struggle with that right now. You know, we're trying to use people that we know that, you know, have some influence in convincing them, but also the other piece of it that's really a challenge is maintaining those directors. So they realize how much work it is involved. And in order to have a good governing board, you can't have a lot of, you know, turning around. You want them to be there for multiple terms because then they really start getting the mojo and understanding what we're all about.
Thank you. It's kind of like the legislature.
Yeah.
Thank you.
Okay, Representative Teresa.
Thank you. So, do you have any guidelines as to how they'll be paid, like salary or per diem expenses? And second part is that, do you have any cap that how much they can be paid? Some guideline, not unlimited?
Yeah, so again, since there's no law on that, good question. We haven't done a lot of the research yet to really understand. What I do know, some of the states that are charging, it's a nominal kind of a retainer once a year, and then sometimes they'll get like a meeting fee just to help with some of the expenses associated with the meeting fee. It's nowhere near what some of the similar sized community banks are getting as far as stock options and other payment mechanisms. We're looking at more of a, most likely an annual stipend. But again, as we really do more research, once something like this does get passed, we would look at competition and then we'd kind of go back and get a pulse of what our members would be comfortable with us providing as far as compensation.
Further question may inquire.
So, do you have any plan or intention to put those guidelines in the bill itself, or that will be after?
No, we don't want it in the bill.
Okay, thank you.
And Reb, I just want to clarify, it's also compensation, it's not salary. Compensation can take different shape or form. I can think of many examples, but one example that comes to my mind is we want everybody to participate in this democratic organization. So if there is some limitations, and let me give you one specific example. If there is a mother that requires some sort of childcare, that could be a compensation, right? Because we want to make sure that perspective of that person, it is encompassing the mission of the credit union as well. So it is compensation, is not limited to salary. And the safeguard mechanism here is that the members will decide how that compensation is going to look like. And it's going to be an open process in which the credit union members get to vote. And the plan, of course, the plan is put forward, but ultimately it is a democratic decision by the members. Thank you.
Yeah, thanks. Thanks for the answer.
Okay. We're all set. Thank you very much. Having no more cards, we will close the public hearing. Okay, next is 525. Okay, we'll open up the public hearing on Senate Bill 525 and hear from Representative Ault, who is going to introduce the bill.
Thank you so much, Mr. Chairman, members of the committee. Once again, my name is James Tebow. I'm the state representative for Franklin and Northfield, and I'm here today on behalf of Senator Innes to introduce Senate Bill 525. Once again, I'll just read his statement verbatim. To provide some background, the Business Finance Authority is a self-funding agency that was established by the legislature in 1992. Since that time, they have helped 6,000 New Hampshire companies start, grow, and thrive in the Granite State. Several tools are used by the BFA, including the ability to partner with major employers and build high-impact projects across the state. Some examples include 2 manufacturing facilities with Sig Sauer that support the needs of our troops and international allies, recruiting BAE systems to Manchester, bringing New Balance to New Hampshire, and expanding Green Source and Wayland Engineering in Charlestown. Each of these projects involve BFA partnering with the private sector on real estate development that has added thousands of new jobs and created a significant tax base. These are not subsidies, and they do not cost the state anything. Currently, there's a statutory limit that caps the BFA's ability to do these highly successful projects. This limit is not indexed to inflation, and historically, the BFA has to come to the legislature to increase this limit whenever needed and have always appreciated the legislature's support in this regard. This proposed bill will increase this limit. To reiterate, the limit does not allocate capital to the BFA, and the state of New Hampshire has never funded the BFA's operations or projects. This limit, also known as contingent credit limit, is the limit on the BFA state of New Hampshire. Is the total limit on the BFA that the state of New Hampshire guarantees that can be in place at any given time. The state has never had to pay out on the BFA's guarantees. This tool is used very effectively, and it goes through a series of public hearings. BFA board members approval and, series of public hearings, BFA board approval, and governor and council approval each time. As New Hampshire has been more successful in recruiting companies into the state, and since building manufacturing facilities cost more than it did in 1992, the BFA's cap is running out faster each time it is raised. This cap needs to be raised substantially for the state to have a credible chance at recruiting the next level size of employers that have begun to show interest in our state. Importantly, the state treasurer, who is on the board of the BFA, has indicated that there is no problem with raising the limit to this level and would have no impact on our bond rating. Thank you, and I will leave it to the folks here to further testify on this bill. Thank you.
Great, thank you. Chair will call on James Key Wallace from New Hampshire BFA. I would say since I've been on this committee 40 years, I've seen this bill at least 4 or 5 times. Yeah, you got it.
There we go. For the record, James Key Wallace, Executive Director, New Hampshire BFA. Thank you, Mr. Chairman, and to the committee for having me here today. I thought the bill was introduced well, and it hit all the high points. I would add a couple things. One being, if this bill feels eerily familiar, it not only because it hasn't been done several times in the past, but the House actually had a very similar bill, almost exactly worded, albeit with a slightly different dollar amount that the full body of the House just passed. The House had introduced the same bill. The Senate had the same bill. The House one.
What committee did that go to? That must have gone
Came
to
out of House Finance.
Finance,
Yep. And it's gone over to the Senate. So the House version of the bill, exact same language, except it was HB 1042. The amount the cap was raised to was $400 million. The Senate version, which is now here, went to $500 million. The House one that went over to the Senate was adopted. It was amended to $450, kind of meeting in the middle with where you guys were, and it was passed. So if it feels familiar, it's because you just voted on it about 2 weeks ago. But I'm happy to answer any questions.
Yeah, Representative Ammon, you may inquire.
Thank you, Mr. Chair. Thank you, James, for coming. So 1993, we had 80 million, and then 1994 was 95 million, and so on. Those kind of look like inflation adjusted periods. I could sort of see maybe inflation was a factor there. But this one here from 200 million in 2023, which is three years ago, to 500 million. So that's like a 250% increase, or however you want to.
Probably the the big beautiful bill had more money in it for it.
Yeah, just curious. And then like a related question, and this goes to my point at a previous meeting. Anytime we put a dollar amount in statute, why don't we inflation adjust it? And that way you don't have to keep coming back and we don't have to keep hearing the same bill over and over again. So if you could speak to those 2 points. Yeah.
Sure. Yeah, great questions, Representative. Thank you. You're right. The reason that it's gone up more than some of the earlier numbers, so that number, the gentleman's doing the hockey stick, that's definitely part of it. In the early 90s, the BFA was very new and getting off the ground. So the pace of adoptions for its programs weren't quite what they are now 30 years later. So you're seeing just a bigger absorption factor of the programs. And, you get that. The other feedback we got is people maybe are sick of us coming and asking for this every year. And so to ask for what we think we're going to need is another factor. But the two big drivers are the recent period, inflation has been really high. We've seen that particularly acute in construction projects, lumber, steel, labor. So the same projects we were doing per square footage, even 5 years ago, are almost, double. They're about 80%, sometimes more today. So that number alone is big. But then we're also getting much bigger employers coming and using the BFA services. New Hampshire's just punching above its weight more and more, which I love. So, we were doing projects, $17, $20 million kind of a piece. And, the New Balance one, which is public record, was 70 million. So now asking for an increase of a few hundred million potentially really only means 4 or 5 projects. So that's the answer to that. And was there a second question, Representative? I apologize.
The second half was, should we just inflation adjust it, or is the cap necessary at all? I mean, how do we stop spending your time coming before us, Yeah.
Great question. I do think a cap is necessary. If the state treasurer here, I believe the way she would explain it, is that when we do our bond rating, although this number is perfectly palatable, they look at all the potential things the state is doing. And if everything went to what in a handbasket all at once, where can the state kind of handle that? So you do need a cap just to help that calculation be possible when you're dealing with the rating agencies. But a inflation index, I certainly wouldn't be opposed to that.
Okay. Maybe.
And further question.
Just one last question. Since you're here, this is not related, but this committee is the crypto policy committee.
Oh.
And if you could just in a few words, the recent news about the Bitcoin-backed municipal bonds, which made national news, and you're the architect of it, if you could just tell us a little bit, and maybe they can follow up later with you if they're more interested.
Sure. Yeah. Thanks, Representative. I'll have to guard my comments a little bit since that bond is in the public sale process, which prevents conditioning the market or promoting the bond because it's otherwise it have to be registered to the SEC in a different kind of way than it is. But yes, so the facts are one of the things the BFA does is we're a conduit bond issuer, which means private companies go get private capital, but structured in the form of a bond, right? I mean, Apple doesn't borrow from their local bank, although I would love it if they tried. We'd be happy, and our banking friends would be happy to do that. They borrow the money in the form of a bond. And there are many types of projects that go through what's called an issuer. Every state has one. For business projects in New Hampshire, that's us. It's not New Hampshire money. It's not New Hampshire backing. It's the legal and technical way bonds go to market. So we were approached by a company with actually a whole bunch of people that were involved. And they said, hey, we want to expand. And we just happen to be in the digital assets business, which I'm glad to hear there's a committee of experts. I don't own any digital assets. It's not my forte. But they said, we want to borrow money just the same way that a company with a factory borrows money. And we want to borrow $100 million. So we helped them and their advisors construct a way where that company pledges 160-ish million in their case, Bitcoin, which is put in a New Hampshire trust. That collateral is used to go borrow $100 million for the company to borrow and expand operations, which sounds pretty boring and kind of conventional when I say it, but I think as the representative indicated, in the digital asset world, that's actually pretty earth-shattering to have a digital asset be brought to the capital markets in the same way as conventional assets. So we're really excited. It's a big deal for New Hampshire, and we think will help attract more companies.
Representative Burrows.
I'll make it quick because I know this isn't what we're talking about here. But what's the advantage for a company to do it that way rather than through traditional financing?
Great question. So most companies that are in the digital asset space don't have access to traditional financing at all. And the fact that they may now do, that is sort of the innovation that they have. Bitcoin is still viewed as ethereal to many in the traditional asset space, especially in the municipal bond space. So the fact that this can be set up to be conventional is what makes it so interesting.
And there's a recent bond rating, right?
Yes, Representative.
What was the rating?
BA2, I'd have to double check. I think it's sort of like Ford Motor kind of equivalent. So the fact that it got rated at all is a pretty big deal.
I was going to say.
Yeah, first one actually in the
Congratulations.
world. So thank you. Yeah.
Okay.
Yep.
All right. Thank you very much.
Yeah. Thank you.
I having no more cards on Senate Bill 525. We'll close the public hearing. And we're on to our last one, Senate Bill 607, the short-term limited duration health insurance policy. So, Senator Roswell, are you here just to visit and keep an eye on us, or? Right. Okay. Yeah, we had a work session this morning. Yeah. Sorry, yeah. Yeah, that was 408. 5. Which one? 548. Yes. Yes, we definitely had a discussion on that today. We already had it. No, I'm sorry. I should have realized you were here for that in the morning. Yeah. Yeah, I can. And read about your announcement of retiring. Congratulations. Perfect. Okay, good. Okay, right. Okay, we'll take up Senate Bill 607. Representative Walt, who will introduce it for Senator Innes.
Thank you so much, Mr. Chairman, members of the committee. Once more, my name is James Tebow. I'm the state representative for Franklin and Northfield, and I'm here on behalf of Senator Innes to introduce Senate Bill 607 relative to short-term limited duration health insurance policies. Roughly 64,000 people in New Hampshire went without health insurance in 2024, and that number is likely to increase this year due to significant individual and group premium increases for 2026. People need more affordable options, including short-term health plans. As amended by the Senate, this bill would make updates to short-term health plan duration and renewal limits to reflect the modern insurance regulatory environment and ensure these plans can fill coverage gaps until the next coverage year or until personal circumstances improve. Under this bill, someone could purchase a short-term plan for an initial period of up to 12 months and limited renewability for no more than a total of 36 months. Similar initial duration and renewal limits are in place in 29 states. Short-term plans are an important safety net for people who are just starting out at work, between jobs, wanting to start their own business, or who are priced out of comprehensive coverage. Generally, these plans offer much lower premiums in exchange for more limited coverage and higher deductibles, while ensuring that someone does not bear the full brunt of a major medical bill without any type of coverage. Short-term plans are not a fit for everyone, which is why disclosure language was included that highlights the potential limits and trade-offs of these plans. Comprehensive coverage remains available to those who want it and need it through the individual or group markets. Thank you, and I will leave it to others who may be here to testify. Thank you.
Thank you, Chairman Hunt, and members of the committee. My name is John Reynolds. I'm the State Director for NFIB in New Hampshire. We represent more than 1,700 small businesses across the state. And as I mentioned yesterday, healthcare costs are one of the first things I hear about from our members, especially over the last 6 to 8 months. It matters both on the employer side because it's such a crucial benefit for attracting and retaining workers. You know, healthcare coverage is almost universal at very large businesses, but it's a struggle for most small employers to offer it. It's also very important on the individual side for the owner themselves. And when I was traveling around the state last fall and this winter talking to people, one of the things that stood out to me was how often I heard from small business owners, generally from their late 40s through their early 60s, who said, yeah, I don't have coverage. Doesn't work. We can't afford to offer it through the business, so I can't get it as an employee of the business, and I just can't afford to do it as in the individual market. It's just too expensive. And I know comparatively, you know, especially across the Connecticut River with our neighbors in Vermont, our rates are much more affordable, but still they're quite expensive, especially as you get up the ladder, as you become more mature in life. Is that the right? I think that's the right way to say it. But this is obviously a big risk for the business owners themselves. You know, if you're at home, you fall off a ladder, if you have a heart attack, if you're like me, and the tree always falls the opposite way of the notch cut, which I shouldn't be allowed to use a chainsaw. But there's a lot of risk here, right? Because generally, you know, our members are people who have 90% have fewer than 20 employees. Most of them are 5 to 10 employees. If the owner goes, so goes the business. And that's a huge risk. And they're not alone, as the representative mentioned in the introduction. 64,000 people were uninsured, you know, heading into this year, with an average premium increase of 15 to 20% in the individual market. That number is likely to grow. People need an affordable bridge option, and that's what short-term plans can be, and what they are in most other states. New Hampshire's limits were primarily adopted in 1995 and amended in 2009. They limit coverage to no more than a term of 6 months. There's no renewability, and that poses two real big problems for the practicality and usability of these plans. The first is those limits were adopted before guaranteed issue, before guaranteed renewal, and importantly, before limited open enrollment under the ACA. So you can only enroll in an individual market plan from November to early January, unless you have a special enrollment period. So if you don't enroll in an individual market plan, or say you have to drop it for financial reasons in March, right? Your only option is to go get a short-term plan for 6 months. That'll get you to September. Then you have to go, if you want to have continuous coverage until the next plan year in January, you have to go through the enrollment process all over again. The other problem is, sort of hand in hand with that, is once you hit that 6-month limit, if something happens in month 4 or 5, then all of a sudden you're in the middle of dealing with a health issue and you have to go through the enrollment process again. So it just doesn't make sense in kind of the post-ACA environment to limit it to limit the initial duration to 6 months. And I think what the other 29 states that have adopted this 1 month initial, up to 1 year initial term, and an additional 24 months of potential renewability. The idea is, well, let's let these serve as a bridge not only to the next plan year, but until someone's personal financial circumstances allow, perhaps, or somewhere over the rainbow, there's healthcare reform that ensures that comprehensive coverage is affordable and within financial reach for everybody. I don't want to bore you to death. I could talk about this sometime. I went and looked I picked Cheshire County just totally at random for no reason, but a 50. Oh, that's right. But I was just looking at comparatively prices for, just to illustrate the price difference here and why these are within reach for our members who say that individual market plans are financially out of reach for them. Short-term plan with $1 million benefit max at a $15,000 deductible, $167 a month. At a $7,500 deductible, $221 a month. A $2 million benefit max, $15K deductible, $225 a month. And I know I sound like an insurance broker here. I'm not.
So let's start again. Do it slowly again.
Yeah, okay. I'm
Okay,
sorry.
so you $1 million.
I stopped for coffee. I'm
Someone can
sorry.
get $1 million coverage.
So if you're by a short-term plan,
Short-term plan, $1 million coverage.
$1 million in coverage at a $15,000 deductible, which is high
$15,000
deductible.
deductible, very high deductible.
But again,
right.
you know, the people
And
are
what's the
looking
premium for that?
$167 a month.
167,000. Okay.
At a $7,500 deductible, same plan, $221 a month. 52-year-old non-smoker, Cheshire County.
Is there any age banding?
There is age banding.
So you're going
don't-
back to your original example about people who are aging out when it comes to the small group insurance. The premiums are going to be.
So that's don't know spoilers. And then similar premiums at $7,500 and $15,000 for a little bit of a higher premium, but only by about $50 each for a $2 million benefit max on a short-term plan. Then you get to the lowest cost bronze plan for a 52-year-old non-smoker in Cheshire County. It's $494 a month at a $7,000 deductible, and the lowest cost silver plan, which is 70/30. $633 a month at a $6,000 deductible. So it's quite a difference. And the idea here is, I think everybody, if they could, everybody's going to pick comprehensive coverage, right? That's what most people do. Short-term plans are not widely used, even in states, the 29 states plus the few others that allow the initial duration of up to 1 year. It's a bridge. And it's within financial reach for people so that if they do have that major medical event, they're not wiped out and hospitals aren't saddled with uncompensated care.
Remind me, is there medical underwriting?
There can be medical underwriting. It would vary by
the product.
Plan. Correct. By the product. Thank you. And the only plans that I'm aware of that are available for sale in New Hampshire, short-term plans are through United Health, underwritten by Golden Rule Life Insurance.
Golden Rule.
Thank you.
Yeah, they always had medical underwriting. That was Golden Rule was the whole cause of passing 7-Eleven under Gene Shaheen, where we bought into the guaranteed issue, but because they were medically underwriting.
Yeah, and certainly there are trade-offs, and that's goes as was mentioned in the introduction. That's what the disclosure is there for. The disclosure largely mirrors what is already required at the federal level, but if that disclosure were to go away at the federal level, then at least we know it's going to be offered to consumers. We don't want anybody to be misled in any way about what this is, right? This is catastrophic major medical insurance.
Right. So.
Thank you. Just taking that underwriting taking it one step further. So I buy a plan for under this bill for 12 months, and then I can renew it 2 more times. If they underwrote the policy the first 12 months, do they go back and do it on renewals as well?
The premium can just like an ACA plan, the premium can change based on, what factors are allowed in rating, what factors are actuarially justifiable. Yeah.
So just, for everybody's edification, at one point in time, these were illegal. And the short-term policy was the controversy, obviously, when the Affordable Care Act, which was New Hampshire already had under 7-Eleven. We had banned them because we didn't want medical underwriting. We didn't want anybody to have to take a physical before they can get health insurance, and it was guaranteed issue. And yes, it was fairly low deductibles and high, and high coverages and with no limits. One of the first things that occurred after the Affordable Care Act was repealed, and given that Republicans weren't very good at trying to figure out how to repeal it altogether, that this seemed to be a reasonable way to get around it a little bit, to offer this short-term coverage. But like you say, there are some the medical underwriting, so you have to get a physical. You got to prove that you're healthy and you don't have cancer, I guess, and then there are limits to the policy. So they were somewhat controversial, but over the years, we have slowly allowed him, and this is I think the last step. I don't think they're going to go any farther than this, but it is just something. Like I say, it's usually for the employer. It's going to buy the employees are not going to be interested in this policy because they're going to want something long term. But that for some employers, this is a good answer for them.
And if I could just add, these plans are subject to whatever other state disclosure requirements that NHID comes up with. We did work with NHID in this language. They had no concerns. They appreciated the addition of the transparency language.
Right.
The health plans had no concerns. And did I already say this? They are subject to
Do you know
state
which
mandate.
companies are actually selling in New Hampshire right now?
I believe it's only United Health.
Only United.
Yeah.
Yeah. Okay. Perfect.
Just affordable options, please.
Right. Well, given that United dropped my Advantage plan, right, I could have gone this way, but I was looking for something a little more
Don't send
long
me
term,
back to
something more long term than this.
Don't send me back to Minnesota.
Okay. Is there any other questions? Seeing none, thank you very much. And having no more cards, we'll close the public hearing. Yes.
Question for the chair. I'm looking at Senate Bill 657, the AI one. Is that an early bill?
Yeah, so the one we discussed today?
Yeah.
Yeah,
Did we discuss it today? I don't remember.
no, which one, what's the bill number?
657.
657 is an early bill.
So I don't think we had a work session on it.
Creating a study commission to oversee the use of artificial
But
intelligence.
I'm going to take a stab at an amendment on the existing IT
This is
council.
just this is a study. Right,
Do you hear what I'm saying?
yes, that's fine. That'd
Is
be
that all
good.
right? Okay, thank you.
I mean, didn't we already do a study commission? Didn't we already do something on AI?
We talked about it. Was it last week or yesterday? Maybe it was yesterday. I get it all mixed up.
Yeah,
So this is a study commission,
this is the
a
study
committee,
commission.
but we have it. I'll talk.
Yeah, I'm just saying.
Yeah, we have it. We talked about the idea of like.
Oh, that's right. That's what
Adding it to the council and letting
Right.
them handle it. 'Cause they're the audit.
Right. Adding it to their task.
It should-
Right, the IT, that's what IT council.
Is that okay?
Yeah, let's do it.
So we don't need a work session on it?
I'll make sure it's scheduled for Tuesday. Yeah.
5 minutes on it.
Yeah. At this point, I'm gonna schedule next Tuesday morning, we'll have all the bills that are early bills. And then I'll attempt to have an exec session, that, Wednesday and Tuesday after lunch. And then probably have another one, subcommittee. Oh, yeah, we got more public hearings. So every afternoon, we're gonna be doing public hearings until we're done.
All right, so we're doing all the early.
We gotta get the early bills out, because they have to be out next week.
Thursday.
For the subcommittees, can we organize by topic?